To the European market open a minute to go until the start of cash equity trading. I'm Tom Mackenzie in London, and here are your top stories. A whimper, not a bang. Biden's first round of sanctions underwhelms, but the US and allies threaten more if Putin doesn't change course on Ukraine. Markets shrug off the penalties with stocks and futures climbing, but not before the S&P 500 falls into a correction. Oil is little changed, as is the dollar. Plus, the first set of earnings for Barclays' new CEO. The bank reports its highest annual profit on record, despite a slump in trading activity. Let's check in on the futures then. Some relief in these markets. We had a flurry of sanctions announced by the UK, the Europeans, and those proposals were put on the table. And then, of course, Joe Biden came out with that speech and announced what he described as the first tranche of sanctions. But the Bloomberg headline is they landed with a thud, not with a bang. And officials in Washington stressing more are in the offing if we see further action from Vladimir Putin, the Russian president. Currently, the FTSE 100 is trading range-bound just in the first few seconds as we await for these major indexes to open. The futures were pointing to gains of between 0.2 and 0.3%. Yesterday, European equities ended up just about in the green. US stocks, though, were lower, but they paired some of the heavier losses on the day. Again, we're looking, of course, still at the basic resources picture around oil, which clings to around $97 a barrel, with many forecasting $100 within reach. And of course, it is still an earnings season here in Europe. We're getting Barclays, Rio Tinto, Puma, and we'll break those down for you in the next few minutes. I currently just have the FTSE on the screen here. We'll change it over and see how things are playing out cross-asset as we look ahead to the US Open. By the way, when it comes to the UK, we do have Andrew Bailey, the Bank of England governor, giving testimony later today, and investors certainly will be gauging any comments there to give clarity on where he and the team at the BOE stand in terms of the aggressiveness of planned additional hikes from the UK Central Bank. The future stateside pointed gains of 0.5%. The yield curve flattening is pronounced today. Yields up close to 7 basis points on the US 2-year. It's more like 3 basis points on the US 10-year the last time I checked. Brent is currently at $96 a barrel, a little range bound. It got up to $99 yesterday. It's come off a little bit, but $100 is certainly still in play. That is the view of many, including the likes of Amrita Sen. And in terms of the ruble, what you're seeing, in fact, is a bit of weakness, about 0.4%, despite the fact that Russian assets yesterday paired some of the heavier losses again on the assessment that maybe the initial round of sanctions were not as severe as some had expected. It's a national holiday in Russia today, so no equities trading. I want to have a look at commodities because, of course, that is central to what is happening with the geopolitics, the flow through to the commodities space. And we've seen the Bloomberg commodities index get back to new record highs. As you can see here, this is spot prices, of course. We're seeing a whole range of commodities, whether it's soft commodities or oil and gas, getting back to very elevated levels. And the question, of course, is how this feeds into higher inflation already at 3-4-decade highs, whether it's Europe or the US, and the conundrum then that poses for the Federal Reserve and the ECB. They look through the growth shock, the potential growth shock, and focus squarely on tackling inflation. Does it accelerate the pace and aggressiveness of rate hikes, or do they have to weigh up the potential economic impacts as well? Just something to bear in mind. Okay, let's get back to the key story then that remains with us. Talks are off, but the sanctions are on. Those are the messages coming from the US as the West ramps up measures against Russia.
The world must respond with all its economic might to punish Russia.
We're implementing full blocking sanctions on 2 large Russian financial institutions. We're implementing comprehensive sanctions on Russian sovereign debt.
No certification of the pipeline can take place right now. And without this certification, Nord Stream 2 cannot go into operation.
The UK is sanctioning the following 5 Russian banks: Rossiya, IS Bank, General Bank, Promzyaz Bank, and the Black Sea Bank. And we are sanctioning 3 very high net worth individuals. This is the first tranche, the first barrage of what we are prepared to do.
Okay, the Prime Minister of the UK, of course, Boris Johnson, speaking there. Let's get the latest then with Bloomberg's European correspondent, Maria Tadeo, who is on the ground in Brussels. Maria, what are the sanctions from the West targeting? Do we know the specifics? And are they likely to cause enough pain to hurt Russia and to make Vladimir Putin pause and rethink his actions?
Well, Tom, those are 2 very important questions. On the one hand, when you look at the detail, it is clear that they've gone after the sovereign operations or sovereign debt operations of the Russian Federation. They're going after some of the big banks. It is worth noting, however, the BTB and Sberbank are not part of this list. And of course, they're also going after Duma members, so members of the Russian parliament that voted in favor of this decree that would recognize breakaway regions and, of course, high net worth individuals. It is worth pointing out, however, that Vladimir Putin, the man who signed this decree, does not feature on the list. But behind the scenes, what officials say is that these are incremental and they will continue. And over time, it will do damage to the Russian economy. They also say that at this point, it was not the right time to trigger, quote, the mother of all sanctions, because what is happening at this point is just recognizing a reality on the ground, Tom. We know that these 2 breakaway regions have been outside of the Ukrainian government control for about 8 years. We know there's been fighting. We know they're armed to their teeth by Russia. So a lot of this is recognition to that. What is important to highlight, however, is that the United States is now saying we see this as the beginning of an invasion of Ukraine. We don't see this as a limited operation, probably escalation to come in the next few weeks.
Maria, what is the diplomatic path, if there is one? We know that Blinken and Lavrov, it seems Blinken has cancelled that meeting that had been set up for Thursday. There had been an assumption that that was going to lay the groundwork potentially for a meeting between the 2 presidents. That is now, it seems, off the cards. What is the path to diplomacy if the Normandy format is out and if Minsk is out?
Well, Tom, the short answer to that question is there isn't at this point. There's no diplomatic way forward on the table at this point. We know that yesterday Vladimir Putin said, in his view and in his eyes, and of course his actions very much tell you the story, the Minsk agreements are dead, so there's no going back to that. Remember, the French, the Germans always said that is the last option that we have available to solve this the diplomatic way. The meeting that was supposed to happen tomorrow in Geneva between Sergei Lavrov and the U.S. Secretary of State has also been canceled. The United States says there's no point talking to Russia. And by the way, Tom, on Friday, there was also an invitation extended to Lavrov by the French government to have talks there too. The French are now saying that is completely off the question. And the French government, by the way, furious at what they believe was Vladimir Putin playing Emmanuel Macron and just flat out lying when he said, I still see a diplomatic way forward. Let's have a meeting with Biden. They believe that in reality, he had no intention of doing this.
Okay, interesting. Macron and his team feeling like he was played by Putin. Maria Tadeo on the ground in Brussels, following all of the twists and turns for us. The stamina of Maria Tadeo is incredible on this story. Okay, let's get into the key market drivers with our markets editor, Christina Kino. Then the markets seem to brush off these initial sanctions, Christina. Are they being overly sanguine? Is there a longer-term impact on the Russian economy here?
Well, Tom, yeah, I think what we're seeing today is a bit of a sell the rumor, buy the fact sort of situation in markets, especially because it's been such a big ramp up in risk aversion over the last 2 days. And so it's just typical, you know, for markets to do a little bit of a climb down from that. But yes, longer term, I think the question is still, what does this really do to markets and particularly sentiment on Russian assets, which have really been at the forefront in terms of bearing the pain that this has inflicted on markets. And particularly the ruble, of course, investors are still increasingly negative on that currency. I think at the moment we're seeing in terms of options pricing, there's about a 50% chance traders see that the ruble will hit a record low this year against the dollar. And so longer term, I think this has definitely started to break down that sentiment, especially compared to last year when Russia was one of the favorite investment destinations by investors.
Because, of course, it's huge exposure to commodities. We've got the risk premium terminal up now that shows the risk premium that is elevated on Russian debt, because that that was what was interesting. It's not a big surprise they're targeting some of these outlier banks and some of these high net worth individuals, but it was the restrictions around raising capital offshore that is potentially the most interesting that came out of the sanctions yesterday, and we've seen that elevated picture when it comes to risk premium. In terms of the commodities markets then, $97 a barrel as things stand on Brent. What is the read across? We've got the Bloomberg Commodities Index at fresh record highs. Does it remain elevated at these levels, or is it a one-off shock?
Well, I think it will stay elevated until we get some clarity in terms of some of the key commodities questions that we're looking at. Primarily, of course, the fate of Nord Stream 2 still hangs in a balance of these geopolitical tensions at the moment. The chapter is still not closed there, and so traders definitely still watching for that. And of course, the question of supply as well, right, in terms of the broader energy supply from Russia to key European governments, and investors definitely watching for some indication that governments do they have alternatives? Are they feeling relaxed about the fact that, you know, there is potentially a bit of a supply crunch here when it comes to energy, and at a time when we're already grappling with quite the energy crisis in Europe?
Okay, and when it comes to the yield curve flattening and the prospects of further rate hikes, how are investors thinking about how the central banks react to a potential inflationary shock then? Do we get a more aggressive rate hike cycle from the Fed, from the ECB?
Well, that's certainly what markets are bracing for, Tom, I think, because initially, you know, it was a question of whether these geopolitical tensions would be enough to stop central banks in their tightening tracks. But I think once we got that conversation of $100 per barrel on Brent, I think people are starting to realize this is actually potentially an added inflationary shock, in addition to what we're already seeing of a broad increase in wages and consumer good prices. And so add this to that sort of picture, and I think the pressure is once again on for central banks to respond to that broader inflationary picture.
Okay, the pressure just accelerates on the central banks in what was shaping up to be a hugely complex year anyway for them. Bloomberg's Christina Aquino walking us through the key impacts across these markets of what is happening on the geopolitical front, and of course the implications for the central banks. Coming up, we have more market reaction to US and European sanctions on Russia. That is next. Stay with us. This is Bloomberg.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will be making a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
Welcome back to the Open. We are 13 minutes into your European trading day this Wednesday, and some pretty decent gains across the European benchmark of 0.8%. The standouts in Italy and Spain. The DAX also up around 1% as investors reassess the geopolitical risks. And of course, the most recent lines were out of Joe Biden speaking yesterday evening, UK time, and announcing those additional sanctions, but not coming in as hard as some had expected. US equities ended lower by between 1.5%. They paired some of the heavier losses. Future stateside pointing to gains of between 0.8% and a full percent on the NASDAQ. In terms of some of the individual movers, because we're still in earnings season here, and that's been overshadowed by what's happening on the Ukraine border, we do have a number of standout corporates to bring to your attention. Barclays gaining 2.6%, a solid set of earnings for the newly appointed CEO then. Record annual profit, dealmakers beating forecasts, but the investment bank revenue for the fourth quarter missed, but investors seem to be looking past that. Gains of 4-5 points for Barclays on the back of those earnings. Rio Tinto, they also came in with record profits for the year of 2021. Of course, very high iron ore prices, that strong demand from China, but there's uncertainty for the prospects of this company and demand going forward, particularly around prices. Currently down 0.7%. Inflation could weigh on that company. And Puma is struggling with supply chain constraints. It is looking for revenue of between 600-700 million for 2022. Stock down 1.3%. So 600 to 700 million euros for this year. Pretty modest. And again, supply chain constraints continue to weigh on that retailer. So just three corporates just to bring to your attention this morning. And again, just flagging NASDAQ futures now gaining and rising about 1% after the losses that we saw yesterday. Okay, let's get into the market reaction then and some analysis to the first set of sanctions that the US and its allies have imposed against Russia as Washington accuses Moscow of launching an invasion of Ukraine. Russia denies plans to attack. We're now joined by Estelle Menard, CIO at LCL Private Banking. Estelle, thank you for joining us this morning. Are markets overly complacent at this point?
Well, are they over complacent? I'm not sure, you know. Of course, Ukraine is a risk. This is the big risk, and the markets cannot manage this risk. It creates uncertainties, it creates volatility. And of course, these tensions in Ukraine, they are only adding to concerns. And potential sanction could threaten supply chain, especially on key commodities. But do remember what happened in the past. Do remember the Iraqi war. Do remember the other geopolitical tension we had. The markets, even if it's a risk, cannot manage it. And there are other technical factors that can support the markets right now. I think it does not, it does understand what happens. But today, it just creates uncertainties. And what happened on the markets in the beginning of the year, it just tells us that despite the fact we have a geopolitical crisis, despite the fact we have inflation concerns, the market is still okay. I mean, is still
okay. Do we have to, Estelle, do we have to,
by. Yes.
Yeah, do we have to reassess? I mean, a lot of the support has come through from earnings for these equities, and that was a big focus for many strategists we speak to. Many guests that come onto the show and say, look, 2022 is going to be a year of still continuing strong earnings and a solid growth picture. And that Europe could, someone was making the call, Europe could outperform the US. Does that have to change now? Does that calculation have to change on the back of these risks around Ukraine and Russia?
Well, I mean, some sectors will be affected if this geopolitical tension between Ukraine and Europe and the United States will last longer. But if we look at what happened, what we saw during the reporting season, we had good earnings reports, suggesting that demand remains robust. And we won't see any change in the demand in most of the sectors. And at the EPS level, surprise, of course, are less impressive than in 2021, but they are still in place. We do expect, for the time being, 8% in Europe. After a very good year in 2021, there are still upwards revisions for 2022. reasonable ones. And today, we are thinking that the next results will sustain the market today. So yes, some sectors will suffer from this tension. Yes, we will see some more inflation in some basic materials. But today, 8% EPS expected. Do remember before 2021, in 2022, it was negative. So fundamentals are strong. They will continue to be strong in the main sectors of the markets. And that will be a very interesting support.
The fundamentals remain strong. They will continue to remain strong. That is your call. What are you avoiding then? Which sectors are most vulnerable and what are you adding?
Okay, if we look at the sectors today, of course, in an ideal market, we will prefer focus on quality, on defensive sectors, low valuation sectors. If we take everything into account, of course, the energy sector will be one of the leaders in this market. But the energy sector did well since the beginning of the year, but it's still an interesting sector. Financial is a key sector as well. Financial because it's a value one, because it's a dividend sector, and because we have quality earnings as well. The healthcare as well is an interesting sector because of this quality profile, this growth profile, but not I would say valuated. Valuation is still limited. And if I would be contrarian in terms of sectors today, I would tell you that telecom should be a good idea as well. It's a dividend one, it's a value one as well, and it should be interesting because we can expect on this sector M&A in the years to come or in the months to come. And that could be a good support for this sector as well.
Okay, so look at telecoms and the prospects of further M&A. What are you doing, Estelle, in terms of hedging, if anything? Are you putting any cash on the sidelines to shelter yourself from these geopolitical events? Are you buying any hedges?
No hedges, because we try to be balanced in our portfolio. Of course, I told you, try to be more focused on defensive sectors first. Be balanced between growth and value sectors as well. That's very important today, because we don't know where the market will go in the weeks to come. So be balanced in our portfolio, maintain our exposure. Why maintain our exposure? Because we are still in a TINA environment first. And if cash is the only protector today, we will take this into consideration in the days to come. But for instance, or for the time being, we do not want to increase our cash position in the portfolio. We have already a reasonable cash exposure, and on exposure, we will keep a balanced exposition between growth, value, stay focused on quality stocks. That's key for us today.
Okay, the importance of a balanced portfolio in volatile times and a volatile environment. Estelle Menard, CIO at LCO Private Banking. Thank you for your insights this morning. Have a great rest of the week. Coming up, Barclays posts a record annual profit. The bank's deal has helped offset a slump in trading. We're going to dig into the details next. This is Bloomberg.
What's happening on Wall Street?
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
Welcome back to the Open and to a top corporate story this morning. Dealmakers lifted Barclays to its highest annual profit on record. That's despite a slump in trading activity. It was the first earnings report for the company's new CEO. Joining us now is Bloomberg's UK finance editor, Tom Metcalf. Tom, walk us through the top-line numbers. We'll get on to the question of Jes Staley and the clawback of compensation, or at least the attempted compensation clawback in a minute. But run us through the top numbers.
Yeah, look, the new CEO, Venkat, is probably going to be pretty happy with this. So the investment bank, again, did well, particularly those M&A deal makers. I mean, yes, trading was down about 33% on the prior year's quarter, but that's a pretty tough comparator to beat given the pandemic sort of induced volatility. And elsewhere in the bank, yeah, all looks pretty solid. The outlook was relatively positive, and, you know, impairments continue to be released. So all in all, kind of the profits boosted to, as you say, that annual record.
And shares currently up 2.4% or thereabouts in the first 15 minutes or 25 minutes or so of trading. I'm losing track of the time. When it comes to Jes Staley then, the former CEO who was pushed out, what are these attempts to claw back some compensation?
Yeah, that's probably going to dominate the headlines, if I'm honest. So obviously this is linked to this ongoing probe with Jeffrey Epstein and his ties to Jes Staley. And basically what the bank's remuneration committee has said is, hey, look, any unvested pay linked to Jes Staley, we're going to pause that, suspend it, while this investigation goes on. So it was expected, but it's a pretty difficult step for a bank to take. Often these clawbacks are very difficult to do, but obviously the situation involving Staley is so unique, and that they've taken that step.
Okay. And we got Lloyd's tomorrow. We don't have time to get your thoughts on that, but we'll probably get you on the show tomorrow to break down the Lloyd's numbers as well. Tom Metcalf, thank you. Of course, our UK finance team leader, breaking down the top-line numbers for Barclays. Again, the stock up currently 2.3%. Coming up, as Europe and the US announced the first round of sanctions on Russia, we're going to speak with a former top advisor to Vladimir Putin on the escalating Ukraine crisis. That interview is next. This is Bloomberg.
almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed. Welcome back to the Open. We are 30 minutes into the European trading day, and here are your top stories. A whimper, not a bang. Biden's first round of sanctions underwhelms, but the US and allies threaten more if Putin doesn't change course on Ukraine. Markets shrug off the penalties with stocks and futures climbing, but not before the S&P 500 falls into a correction. Oil is little changed, as is the dollar. Plus, Hong Kong announces new support measures for consumers and mandatory testing for its entire 7 million population. Okay, let's check in then on the indexes. A question for investors: is this the beginning of the end when it comes to Vladimir Putin's moves on Ukraine, or the end of the beginning? Certainly seeming to brush off the sanctions that we got from the UK, the proposals from the Europeans, and the announcement from Joe Biden, although the US saying this is just the first tranche and it will depend on what next steps Putin takes, if indeed he does take them. The European Stoxx 600 gaining 0.6% then. The DAX is in focus as well, up 0.4% after, of course, the Chancellor there effectively ruled out moving ahead with Nord Stream 2, that controversial pipeline from Russia that would have supplied gas to Germany. And of course, worth reminding that Russia supplies about 80% of its oil and gas to the European market. The FTSE 100 is gaining 0.4%, 27 points. We're looking ahead to the testimony from the Bank of England Governor Andrew Bailey, whether he gives any more clarity on the thinking around further rate hikes and how aggressive he and the team at the BOE are prepared to be. Let's change it on then and see how things are breaking down across the sectors here in Europe. Energy, of course, has been in focus, and we know that the Bloomberg Commodities Index is at record highs on the back of these geopolitical tensions. So though equity markets seem to be looking through the latest sanctions, the commodities markets still very much feeling the impact. You've got auto parts, chemicals, travel and leisure at the top of the list. Every single sector is currently gaining here in Europe, currently as things stand, although retail is just down, currently down 0.1%. But auto's up 1.4%, chemicals up 1.2%. A couple of corporate names as well. Barclays coming out with a solid set of numbers, that's supporting the FTSE 100. Puma is warning about continued supply chain constraints, and Rio Tinto, a record year on the back of strong iron ore prices for 2021 for that commodities and miner. But of course, question marks about what goes forward, particularly on the inflationary front. Okay, markets are reacting then with a shrug, as we say, to the first set of sanctions that the US and its allies have imposed against Russia. The measures will impede Russia's access to global markets for sovereign debt sales and punish the country's elites, at least some of them. But they stop short of crippling top Russian banks or personally singling out President Putin. We're now joined by Sergei Markov, director of the Institute for Political Studies in Moscow and a former advisor to Russian President Vladimir Putin. Sergei, thank you for joining us this morning. How much do you think these initial round of sanctions from the UK, the proposals from the Europeans, and of course the announcement from President Joe Biden will indeed hurt Russia, the Russian economy, and Vladimir Putin?
I don't think that this sanction will influence too much Russian politics, even Russian economy. Of course, any sanction has a negative impact to the economy, but at the same time, we know very well that United States and European Union, they prefer not to use tough sanction against Russia now, but to keep tough sanction in reserve. They want not so much to create damage to Russian economy and Russian government right now, but to threaten to Vladimir Putin and to Russian government by tough sanction if Russia will send its troops to another territory of Ukraine.
And indeed, and there is some view here, at least in the West, that Germany's decision to, at least temporarily, sideline Nord Stream 2 was a pretty strong action from the Chancellor, Olaf Scholz. What is the interpretation of that move in Moscow and by the Kremlin? Does it come as a surprise?
No, it's not a surprise. We understand that it's just a small postponing of certification of one of the part of this Nord Stream 2. If situation will move to the more stable, this certification will be repeated again, and this Nord Stream 2 probably will start to work already in June, July of this year. But same time, if the conflict in Ukraine will be continue, if Russia involvement in such conflict will be more intensive, this Nord Stream 2 will not start work anyway before this conflict more or less resolved.
Okay, Sergei, you were a former advisor to the Russian president. What do you think his next steps will be?
I think his next step will be some waiting and encouraging some political forces inside Ukraine to make some changes to the more moderate political behavior. First of all, what Russia demands from Ukrainian government is, first of all, to stop killing people on Donbass, to stop artillery sharing. Secondly, to stop the policy of political repression against everybody in Ukraine who support friendship with Russia. Then announcement about neutrality in Ukrainian constitution and Russian
Sergei,
language.
Of course, the Ukrainian government denies that it has shelled those positions. It denies killing civilians, and it denies repression of people within Ukraine or indeed those territories. What would you assess as the likelihood of a full invasion at this point?
I think that probability that Russia will have to start some liberation of the people in the southern and eastern part of Ukraine, in such cities like Kharkov, Odessa, Nikolaev, Zaporozhye, where support of President Putin probably something about 70–80% among population, and where most of the people dream to follow the way of Crimea. I think that operation and liberation of the people there, there are have high probability, not 100% of contact, even not 90%, but something about, I will estimate it's about 65% of such probability.
Sergei, what is the reliance of Russia on China, China's economic heft at this point? Russia's economy is around the 11th largest in the world. China's is clearly number 2. How reliant is Moscow on that support?
Now we have much more strategic relationship between Russia and China as before. President Xi, he is moving more close to Russia, and leaders of China repeated many times to Russian leader Vladimir Putin that they will be ready to support Russia and Russian economy also if Russia will be in more tough conflict with United States, because as you know, China is regarding as United States of America as more and more not only rivals but possible political enemy and major threat to China. So this strategic alliance between Russia and China is in the process of construction.
Though, of course, China said it wanted the Minsk process and the Normandy process to continue, those now dead in the water, arguably as a result of the actions of Vladimir Putin. When it comes to the question of energy, will Vladimir Putin, will the Kremlin weaponize energy ultimately if additional sanctions are imposed?
Russia never used energy as a weapon. I had a lot of accusation about this in international media all these years. But the fact is Russia never used energy as a weapon. So it will not happen even now. Russia prepared to build a strategic partnership with Europe, and energy cooperation should be the basis for such a strategic cooperation. It's still on the table, and we believe that after this crisis against around Ukraine will be over, we and European countries will come back to the moving again ahead in this strategic cooperation.
Okay, Sergei Markov, we appreciate your insights, Director of the Institute for Political Studies in Moscow and former advisor to Vladimir Putin. Thank you for joining us. Coming up, an end to Nord Stream 2, we speak with the senior CDU Bundestag member, Peter Bayer, about Germany's response to Vladimir Putin. That is next. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. You know, there's a huge mismatch in supply and demand. Prices are high. You know, prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Welcome back to the Open. 43 minutes into the European trading day. Gains of around 0.8% across the European markets, across the benchmark. US futures pointed to gains of 0.8%, 1% gains on the Nasdaq futures. Let's get back to the question of Germany and its role within these geopolitics, of course, between Ukraine and Russia and the dependence on oil and gas of Europe. German Chancellor Olaf Scholz says Germany and the EU are ready to widen sanctions on Russia if President Vladimir Putin's troops press further into Ukrainian territory. Joining us now is Peter Bayer, Germany's transatlantic coordinator and Bundestag member. Peter, thank you for joining us this morning. The decision by the Chancellor Olaf Scholz to sideline Nord Stream 2, does that mark a pivot point in German thinking around its relationship with Russia?
I think it was the correct decision to be made now. Nord Stream 2 is something that has been, finalized. It's constructed, it's there, but there should never be a flow of gas through that pipeline. I think it's too late. I would have liked to see that earlier, and still we are waiting for a political decision by this German government to say we don't want Nord Stream 2, but it's correct to stop that project with regard to certification process right now.
Is there more skepticism, though, in Berlin around how it deals with Russia? I guess that's what I'm trying to get at. Has there been a sea change in the way that the German body politic thinks about its relationship with Russia?
I think so. I think everybody understands now, or at least almost everybody in Berlin, in the political bubble in Berlin, that appeasement or being soft on, and I wouldn't say Russia, but on Vladimir Putin and his nomenklatura, is a language that he doesn't understand. The only thing he understands is tough and harsh language. So again, I think, yes, could be a changing, or actually it definitely is a changing point, that decision that has been made by the German government yesterday to stop Nord Stream 2. And I think also we need to focus on a new strategic approach, how to deal with Russia, with the Kremlin in the future, because nobody should be fooled with Ukraine. It will not be over. For Vladimir Putin, it's not so much about territorial expansion. It's more about an expansion of his influence, of his power. It's a power question for this guy.
What would that strategic plan look like, in your view? What more does Germany need to be doing at this point?
Well, it's not Germany alone. Everything that we need to do, obviously, has to be played on a larger field, and I'm talking about the European Union. Look, I mean, I think we are still lacking something like a geopolitical approach, a strategic approach to international relations, to foreign politics in Europe. That is something that has been demanded a longer time. But as you know, European Union is a complex creature with a lot of member states, but we are getting there. So I think, again, coming back to your question, I think this has to be, and I think it will be a game changer on a European level. So we are talking about building up a European defense industry. We are talking about how could the European member countries, contribute to a modernization of NATO. Yes, of course, Russia is a big country. It has tens of millions or even more citizens. They are a trading partner. We have like 55% of Russian oil and gas. We're dependent on Russia. So that everything of that has to be taken into consideration. So concretely, we need to diversify urgently our sources of energy supply. That is a strategic issue, and that has to be done and implemented. It has to be also implemented in political decisions now. We don't have any time to waste there.
How much damage did the Nord Stream 2 pipeline issue cause between Berlin and between Washington? How closely are Germany and the US working together now? And is there a concern around the impermanence of that relationship when and if this crisis abates?
I think right now, other than in the past, I think you hear a big sigh of relief, with a lot of appreciation from Washington, D.C., that finally the German government has made this decision to stop Nord Stream 2. Although again, I mean, there should be a political positioning. We don't want that at all in the future. But the transatlantic partners, Germany and Washington, the United States of America, really stand close on that issue. There's a lot of coordination day and night between the White House and the German Chancellery. So there's a lot of coordination. That is good, because it's clear only if we stand united and firm in the West, speaking of Northern America, because I want to include Canada and the European Union, only that language sends out a strong signal to the Kremlin that this guy in the Kremlin understands that he will not be successful in his plans.
Okay, really important context from Peter Bayer and the need for a strategic plan from Germany and its European NATO partners. Germany's transatlantic coordinator and Bundestag member, thank you for your time this morning. Let's get the Bloomberg First Word News now with Laura Wright. Laura.
Thanks, Tom. Amid increasing tensions with Russia, British Prime Minister Boris Johnson is calling for the UEFA Champions League final to be taken away from Vladimir Putin's home city of St. Petersburg. The match is scheduled to be played at the Gazprom Arena on May the 28th. Johnson said there is no chance of holding football tournaments in a Russia that invades sovereign countries. UEFA said that it's closely monitoring the situation. Hong Kong is set to test its entire population of over 7 million people 3 times in March as the government deploys a key COVID containment strategy used by mainland China. As part of the plan, people will also have to take daily rapid tests in between the mass testing. Meanwhile, new COVID infections in the US slowed to the lowest level since the arrival of the Omicron variant. Chicago plans to lift its indoor mask mandate. Canadian banks froze about $7.8 million in just over 200 accounts under emergency powers meant to end protests in Ottawa and at border crossings. Prime Minister Justin Trudeau and his ministers have said the measures are meant to cut off funding to protest leaders. Ottawa's downtown was cleared out over the weekend, but dozens of trucks remain gathered at encampments outside the city. Global news 24 hours a day on air and Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom.
Laura, thank you. Okay, coming up, as cases surge, Hong Kong announces mandatory testing, get this, for its entire 7 million population. I think 3 times. More on that next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Welcome back to the Open. The markets here in Europe looking at gains of 0.9%. Stateside, you're looking at gains on the S&P E-mini futures of 0.8%. Hong Kong is set to test its entire population 3 times in March as it fights a worsening COVID outbreak. Financial Secretary Paul Chan has also been outlining fresh support measures for the economy. Let's get the details on the COVID measures and the budget speech then from Chief North Asia correspondent Stephen Engel in Hong Kong. Stephen spends a lot of time speaking to policymakers in Hong Kong. Steve, what do we know about plans for mass testing then and a potential China-style lockdown for the city?
Well, sure. The chief executive, Carrie Lam, late yesterday announced the plans to roll out this testing plan for all 7.5 million residents over the next month and a half or so by the end of March. It's a huge endeavor and will not cost little. Let's just put it that way. Carrie Lam said the sum will be substantial, as we heard details, and I'll get to that in just a second, in Paul Chan, the financial secretary's budget address also today. This is raising a lot of concerns because you lift up a rock, what do you find under the rock? You're going to find a lot more Omicron cases, much more than they can handle right now. Right now, there are already, I think, more than 20,000 or so patients waiting to be hospitalized under this zero COVID policy that requires isolation for all cases, confirmed cases, asymptomatic or not. So you mass test 7.5 million people. Top epidemiologist at Hong Kong University, Ben Cowling, says you might find 100,000 plus. Then what do you do with them? Now, as far as a mainland style lockdown is a bit of a loaded term here in Hong Kong. Lockdown to Hong Kong people, they equate that to China style and maybe China's interference here. Well, Michael Teen, he is a top lawmaker as well as a deputy to China's National People's Congress, as well as a businessman. He runs a clothing chain, G2000. He essentially says mass testing over a month and a half without restricting people's movements is, in his words, crazy. He's advocating, he told me exclusively on Bloomberg TV this morning, 9 days lockdown, total lockdown, shut all businesses except for essential services, and then do several tests during that time. He wants a shorter window to test and to lock down so businesses don't suffer. He says his business right now is already 70% down in revenue. He says this economy cannot survive much longer if it's a long, prolonged process of testing with really no end game.
So, Steve, on that point, what has the budget response so far been? What is the response so far in terms of that fiscal support that might come through?
They're going to throw more money at it, Tom. That's essentially what they're going to do, to the tune of more than $8 billion, Paul Chan outlined in his budget address today. $6 billion worth for these consumer vouchers for every permanent resident over 18 years of age. They're going to get about $1,300. They're also going to have to pay for all those vaccinations, which of course they're trying to get a certain portion of the population to take. There's been vaccine hesitancy among the elderly here, and also, of course, they need all this testing and then isolation, building more isolation wards. All of this is going to cost lots of money. So the budget address, which lasted more than 2 hours, nearly 3 hours today, a lot of minutia involved with it, but essentially COVID relief measures dominated that.
Okay, great stuff. Thank you. Chief North Asia correspondent Stephen Engel in Hong Kong on the latest there. The markets here in Europe, gains of 0.8%. Futures stateside pointing to gains of 0.7%. One of the standout corporates, Stellantis in Italy, up more than 5%. Surveillance is next. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
Russia has made clear its wholesale rejection of diplomacy.
Plan B is to fight for every inch of our land and every city and every village.
We've cut off Russia's government from Western financing.
This is Bloomberg Surveillance, early edition with Francine Lacqua.
Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London, standing in for Francine Lacqua. Here's what's coming up on today's program. President Biden says Russia is invading Ukraine. The US imposes sanctions targeting Moscow's debt sales and elites. Markets shrug off penalties with stocks and futures climbing. Investors see the West's initial sanctions as limited. And stay with Bloomberg Surveillance Early Edition. This hour we speak to the CEO of one of the world's largest energy infrastructure companies, Snam's Marco Alverà, and to the former British ambassador to Russia, Sir Tony Brenton. Send in your questions on IB Plus TV Go. Okay, let's check in on the markets then. Equity market traders looking through the sanctions that we got from the UK, the proposals from the Europeans, and of course Joe Biden announcing what he described as the first tranche of penalties in terms of sanctions against Vladimir Putin and Russia as a result of his decision to recognize those two territories. Currently gaining almost 1% across the European stock 600. We were speaking to the CIO of LCL earlier saying, look, we still have to think about the fundamentals, and this has been a solid earnings season. That's been reflected in what we've seen from the likes of Barclays and Stellantis as well, the Italian car maker. In terms of the future stateside, pointing to gains of 0.9% after ending lower yesterday. The S&P 500, by the way, in correction territory. There's some debate as to how far that goes, or if there's now a floor under the S&P 500. And the yield flattening continues to 7-point jump in terms of the yield, 7 basis point jump in terms of the yield on the US 2-year, 161. And the 10-year in focus as well, of course, but that yield curve flattening is continuing a challenge potentially for the Fed. Brent at $96 a barrel, down 0.6%. So some move out of these riskier parts, or at least the havens. So gold is also under pressure as well. A bit of profit taking from what we've seen in terms of oil, though, of course, the consensus seems to be that you're further upside for oil prices going forward. We'll see how the geopolitics plays into that. We talked about the fact that equity markets have largely looked through this. But the bond markets, particularly in Russia, where it's a national holiday, you're not getting equity trading, is reflecting a significant spike up in terms of risk premium. And this chart just illustrates it so clearly on the back of this decision by Biden and the White House to impose curbs on the way that Russia funds outside of its borders. And so that risk premium has just spiked up. So there is that pressure there as well in terms of financing and the longer term impact potentially on the Russian economy. Okay, let's get into the latest details around what's happening on the Ukrainian border then and the implications and the response from the West. Joe Biden has unveiled sanctions targeting Russia's sale of sovereign debt abroad and the country's elites. The US president also says more measures will follow if Putin's advances continue. This first tranche of penalties come after the UK and the EU also announced restrictions. So in short, talks are off, but sanctions are on. This is the message coming from Western leaders.
The world must respond with all its economic might to punish Russia.
We're implementing full blocking sanctions on 2 large Russian financial institutions. We're implementing comprehensive sanctions on Russian sovereign debt.
No certification of the pipeline can take place right now. And without this certification, Nord Stream 2 cannot go into operation.
The UK is sanctioning the following 5 Russian banks: Rossiya, IS Bank, General Bank, Promzyaz Bank, and the Black Sea Bank. And we are sanctioning 3 very high net worth individuals. This is the first tranche, the first barrage of what we are prepared to do.
Okay, let's get the latest with Bloomberg's Europe correspondent Maria Tadeo in Brussels. Maria, what are the sanctions from the West targeting specifically? And are they likely, do we have a sense of whether they are likely to cause enough pain for Vladimir Putin to rethink?
Well, Tom, you know, what we hear is that these are incremental, that they will go in crescendo if Russia's aggressions continue. And over time, it will have an impact on the Russian economy. We know that there's been a particular focus on Russian sovereign debt, and some of the financing operations that happen in Europe, but also in the United States, have gone after banks that have close relations with Russian institutions. But we should note they haven't gone after BTB and Sberbank. Those are not in the sanctions list. And when it comes to the high net worth individuals that the UK Prime Minister referred to, well, these are people in the circle of Vladimir Putin. But we should note that Vladimir Putin is not in this list. For many, they argue this is a surprise, you know, considering the man that enabled this recognition of 2 breakaway republics, the man that actually signed this decree was Vladimir Putin himself. The one takeaway, however, I would take from the European side in particular is Olaf Scholz yesterday saying under the current scenario, we're not able to certify Nord Stream 2. And yes, Tom, you could argue Germany's still a big client of Russian gas. Nord Stream 1 is operating on a daily basis, but this is a big, significant, I would say, departure from the German policy until now to separate the politics from the trade. Remember, that is what Angela Merkel used to say. These are different things. We shouldn't conflate them. And this, of course, Olaf Scholz is now saying the opposite, that it cannot be business as usual with Russia at this point.
Okay, Maria, today on that response to the sanctions, the potential impact, and the fact that, of course, Germany has made this significant move to sideline Nord Stream 2. Thank you. And as we've heard, Olaf Scholz has effectively frozen then that $11 billion Nord Stream 2 approval. The German Chancellor says the Russia-led pipeline project cannot obtain the certification needed to start operations.
It sounds technical, but this is the necessary legal administrative protection so that no certification of the pipeline can take place right now. And without this certification, Nord Stream 2 cannot go into operation.
Olaf Scholz's halting of the certification of Nord Stream 2 has drawn anger in Russia. Amongst some of the most outspoken critics of the move has been Dmitry Medvedev. Do you remember him? The former Russian president tweeted, "Welcome to the brave new world where Europeans are going to pay 2,000 euros for 1,000 cubic meters of natural gas." Now, we were speaking to a former advisor to the Russian president who said he doesn't think Putin is going to weaponize energy supplies to Europe. But of course, that question remains on the minds of many. Here to discuss Europe's dependence on Russian gas and more, we have the CEO of one of the world's largest energy infrastructure companies, Snam's Marco Alvera. Marco is also the author of The Hydrogen Revolution. It's a blueprint for the future of clean energy. That's the title of the book. Marco Alvera, welcome to Bloomberg. Thank you for coming on set. It's fantastic to have you here. Francine Lacroix sends her regards and is sorry not to be here alongside us. How vulnerable is Europe at this point?
Now, Europe is almost at the end of the winter. So when I spoke about this with your colleagues in New York, I said at December, it will all depend on the weather. And this was before the escalation in recent days. It was a warm winter, so storages that started empty stayed kind of partially full. So we're now in a much better position than we were at the beginning of the winter.
You've talked about the need for Europe to build out that storage and to buy during the summer so you don't have to compete with the Asian markets. Are we getting any close to that? Are policymakers in Brussels listening to you, and are they acting on that?
They're absolutely acting. There's now a formal proposal by the Commission that have asked member states to consider joint storage and joint purchases. There's various member states that are moving ahead. If we look at the charts of gas prices in these days, today, yesterday, this increased tension in the East hasn't gotten anywhere near the prices to where they were in November. So this energy crisis is much more driven by China than by what's going on in the Ukraine. China's buying more LNG. That's why in the winter we need to stop competing with China for LNG and build our own storage so that we can buy cheap summer LNG, keep it in the ground safely and firmly, and use these extra volumes to help address prices and security of supply issues in the winter.
Okay, let me get your view on the short to medium term and then the longer term. Do you have a view on prices, say in the next 6 months or so for gas? Are they elevated? Are they topping out now? And how tied are they to the geopolitics? So China is a major factor, but there's also the geopolitics, of course.
It's mainly weather, and then China has a steady growth path in gas demand that will extend way beyond 2030 into 2040, 2050. So this is a long-term structural issue. And in the summer, because there's no market south of the equator when it's warm, and we use gas for heating, the prices will come down significantly, and that's when it's a buying opportunity. But if you don't have storage, you can't buy it. So you need some form of market intervention, because the way the market is structured, we have paid almost 400 billion euros this winter extra for our energy. We reckon that with 2 billion of additional storage capacity, we could have reduced that extra bill significantly.
Okay, so there's a number of different components to this and to ensuring that Europe is less vulnerable and less reliant on Russian energy. Part of that is a storage component, which we discussed, but part of it is diversifying to other sellers, so Qatar, the Middle East. Where are we in that process, but also diversifying the energy mix as well? How much progress has been made?
So the great news with storage is that we can use the same storage we use now for gas tomorrow for hydrogen. And we talked about prices for gas being today at 80. They were 180 euros per megawatt hour. Hydrogen will come down to 25 euros per megawatt hour this decade. We can use the same pipes, we can use the same storage, we can mix it with gas, and we can source it from essentially wherever it's sunny and or windy. So the good news is that the infrastructure we need to put in place today is the infrastructure we will need tomorrow to fully decarbonize at a cheaper price. We need it all. We need diversification. We need more regasification in certain countries. But this, I repeat, is a crisis of storage. It's not a crisis of supply. There's no point in having more regasifiers if you're then competing for a few ships. The issue is with the way the market is structured. In China, they can afford the expensive ships because the state is paying that price and it's not transferring it to the rest of the market. Because, and it's getting a bit technical, we have marginal pricing here. What happens if the most expensive ship determines the price for the rest of the market? So we have a market that's worth 3,000 terawatt hours in the winter. We're competing really for about 300 terawatt hours of LNG, and just 50 terawatt hours of that can drive up the price for the whole 3,000. So we need storage to avoid this competition, to lower the price for everyone, and to have more secure energy. Once it's stored within Europe, it doesn't matter where it came from, because it's essentially European gas.
Okay, more about storage than supply, and the technical aspects of it will be glorious to many of our energy watchers who are in the weeds on this subject. When it comes to the question of hydrogen then, and clean hydrogen, green hydrogen, have the higher gas prices accelerated that shift? Have you seen that?
Yeah, unfortunately, the high energy prices are putting net zero a step further down on the agenda, because the urgent crisis is to allow people to pay for their heating without spending too much of their disposable income. So it's a bit of a distraction, because there's not much to do with CO2 and with net zero. The price hikes, as I said, have a lot to do with China, which is decarbonizing for the right reasons. So the good news is that there's a clear trajectory now for hydrogen prices. The Department of Energy in the United States, we at SNAM, the European Commission, we now agree that we can get to $1 a kilo this decade, which means $25 per megawatt hour, which is a lot cheaper than we're paying natural gas today.
And are you seeing different investors taking an interest in green hydrogen? Are you seeing PE, for example, private equity getting involved in this? Or is it still largely driven by the utility companies?
I think there's now finally a consensus forming. If you look at your own research at BNF, and if you look at other analysts in the IEA and IRENA and the Goldman Sachs and McKinsey, they're now all finally saying hydrogen will play a massive role. It can be between 15 and 30% of the energy mix. That's the size of the oil market. So for sure people are interested. It's not going to happen today. We have to avoid too many spikes and too much excitement. We have to start building the infrastructure, which will require trillions of dollars to be built. But this is good infrastructure because it means more abundant, cheaper, more secure, more reliant energy coming from different parts of the world.
Okay, Marco, thank you. Thank you for coming to the studio and giving your insights on the need for that infrastructure for both green hydrogen and gas as well in these turbulent times. Marco Alvera, CEO of SNAM. Okay, Smart Conversations continue on Bloomberg Surveillance Early Edition. Later this hour, we speak to the former British ambassador to Russia, Sir Tony Brenton. But up next, we discuss the move in commodity markets with our markets editor, Christine Aquino. Send in your questions on IB Plus TV Go. This is Bloomberg.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project. Initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London. Commodities have extended gains as the escalating Russia-Ukraine crisis spurs supply disruption fears. The Bloomberg Commodity Index, Spot Index, closed at an all-time high yesterday, illustrated by that chart. Geopolitical worries are adding to concerns about already elevated price pressures. Let's get into the key market drivers then with our markets editor, Christina Aquino. Let's start with $100 Brent. We're not there yet, but we're around $96, $97 a barrel. We got to 99 yesterday. We got OPEC Plus next week. Do prices continue to rally from here? And what is the read across to the broader commodities complex?
Well, yeah, and I think in terms of the direction of prices, Tom, I would expect it to stay elevated and make an even bigger play toward that $100 level until we get some clarity from the direction from OPEC, of course, next week, but also as we get more clarity in the direction of the geopolitical tensions more broadly. Again, I think it's a little bit of a wait and see sort of period now for markets after we got those sanctions indications from the U.S. We got a little bit of clarity in terms of the first step of sanctions toward Russia. But, you know, as we know, this is just the first tranche. I think we're hearing something similar from other governments as well. And so there's potentially more to this, more room to escalate in terms of the sanctions picture. Now, what it means for the broader markets, big implications, of course, for broader markets. We're already starting to look at implications for some of those emerging markets that are big energy importers. I'm talking about Turkey, of course, India, and there's definitely implications there, both in terms of the affordability of this, the fact that the energy costs are just about to surge, potentially even more, right when we're already grappling with quite the energy crisis here in Europe. And of course, the idea of broader prices marching higher generally.
And currently, the equity markets seem to brush this off. It's a risk-on move that we're seeing in the European space at the moment. Futures stateside pointing to gains. We're above 1% across the European benchmark, European Stock 600. Is this a buy the dip move by investors, or is this a refocus on the fundamentals, as our previous guest was saying, the fact that earnings are coming in pretty solidly?
Yeah, I would look at this more as a sell the rumor, buy the fact sort of situation. So yeah, I think there's definitely a lot of that going on at the moment, especially because we've had 2 days of quite the battering in equities and risk sentiment generally. And yeah, as you mentioned, Tom, you know, the earnings season, it really has been quite good in terms of the fundamentals, very much the focus there, especially when investors are trying to sift through which companies are really going to be able to weather this less supportive environment of higher yields and higher rates generally, and which companies don't have what it takes to survive in that sort of environment. But yeah, I think it is at the moment, now that we've kind of digested the Russia-related risks, the geopolitical tensions, I think it's a wait and see again sort of mode until we get the next catalyst, potentially as soon as later this week when we get more price data out of the
Okay, Christina Keener, thank you for breaking down the key market themes, and of course geopolitics front and centre. Equity markets still here in Europe up at more than 1%. Coming up, Hong Kong announces fresh COVID measures and a new budget. We go through the details after the break. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
From New York City, in London, in Sydney, in San Francisco,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom McKenzie in London. Hong Kong is set to test its entire population of over 7 million people 3 times in March. This means the city's government is now deploying a key COVID containment strategy used by mainland China. In his budget speech, Financial Secretary Paul Chan outlined fresh support measures for the COVID-hit economy. This includes giving 10,000 Hong Kong dollars in spending vouchers to eligible residents. To get the details on the COVID measures and the budget speech, let's go to Chief North Asia Correspondent Stephen Engel, who is in Hong Kong. Steve, what do we know then about this mass testing program and how closely it's going to emulate or mirror the kind of programs that we've seen in China and the lockdown as well that's been proposed?
You know, I need to say, I mean, Hong Kong was probably one of the best places in the planet to weather out the pandemic over the last couple of years. We were essentially sealed off. We didn't have a big Delta outbreak. But once Omicron got in here, the criticism of the government has been that they are now playing catch up and not doing a very good job at it. As the rest of the world opens up, Hong Kong is spinning its wheels going backwards. And especially after Chinese President Xi Jinping last week weighed into the matter and said the Hong Kong government must make this containment effort its top priority. Well, Carrie Lam, the chief executive, is heeding that advice, and she last night unveiled a number of measures, including unveiling the plans for this mass testing that you just outlined, which is going to stretch all the way to the end of March and into April with more social distancing restrictions, more flight restrictions, and just more paying for what is supposed to be an international finance center, and at huge, substantial cost, as she admitted. But I earlier this morning spoke to Michael Teen. He is a lawmaker here. He's a businessman, runs a big clothing outlet, G2000. He's the founder of that. And he's also a deputy to China's National People's Congress, its parliament. He says this drawn-out affair of testing, we don't know how many cases it's going to, churn up. And we don't have the health facilities, which are creaking under the pain of too many patients, to cope with potentially 100,000 plus different cases. He says basically mass testing without restricting people's movements is, in his words, crazy. He's advocating a quick 9-day total lockdown of the city. I know it's a loaded word, lockdown. It equates to many people here Chinese-style authoritarianism, lockdown, and suppression of civil liberties. But he says it's the only way to do it and to get an accurate, quick picture of the situation. Testing as well during those 9 days, but do that. Otherwise, businesses are not going to survive this long, lengthy process.
Okay, running short of time, we thank you for the latest and for the update. Chief North Asia Correspondent Stephen Engel on the ground in Hong Kong. Smart Conversations continue here on Bloomberg Surveillance. Stay with us. This is Bloomberg.
SpiceJet 737 MAX aircraft. Earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
President Biden says Russia is invading Ukraine. The US imposes sanctions targeting Moscow's debt, sales, and elites. Markets, though, shrug off penalties, with stocks and futures climbing. Investors see the West's initial sanctions as limited. And stay with Bloomberg Surveillance Early Edition. This hour, we speak to the former British ambassador to Russia, Sir Tony Brenton. Send in your questions on IB Plus TV Go. Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London, standing in for Francine Lacroix. So it's a risk-on move in these markets. Some relief, particularly when it comes to equity traders, that the sanctions from the US, the UK, and the proposals from the Europeans were not as tough, maybe, as some had expected. We spoke to a previous former advisor to Vladimir Putin saying he thinks the Russian president will bide his time, at least momentarily. The European Stoxx 600 gaining at 1% then. The S&P futures stateside, you had losses, and the S&P is in correction territory, but the futures point to gains of around 1%, and the yield curve flattening is pronounced. You have the US 2-year at 161, up 6 basis points. I have a quick look at the US 10-year, currently at 197. You just got a 3 basis point move on the 10-year, and the ruble is rallying by about 0.6%. Under pressure, I should say. That's the US dollar is up about 0.6% versus the ruble. 6.79 or so. It's a holiday in Russia, so we wouldn't have Russian equities trading today. This is the terminal, and this is something to bear in mind. Even though the equities are looking through this, when it comes to Russian debt, the premium on that, the risk premium, has really spiked on the back of this decision by Joe Biden, the US president, to impose curbs on the ability of the Russian government to raise funds overseas. So that is consequential, potentially also a drag on the economy in the medium to longer term. So we'll continue to watch that for you. Okay, Joe Biden has unveiled sanctions targeting Russia's sale of sovereign debt abroad and the country's elites. The US president also says more measures will follow if Putin's advances continue. This first tranche of penalties come after the UK and EU also announced restrictions. So in short, talks are off, but sanctions are on. This is the message coming from Western leaders.
The world must respond with all its economic might to punish Russia.
We're implementing full blocking sanctions on 2 large Russian financial institutions. We're implementing comprehensive sanctions on Russian sovereign debt.
No certification of the pipeline can take place right now. And without this certification, Nord Stream 2 cannot go into operation.
The UK is sanctioning the following 5 Russian banks: Rossiya, IS Bank, General Bank, Promzyaz Bank, and the Black Sea Bank. And we are sanctioning 3 very high net worth individuals. This is the first tranche, the first barrage of what we are prepared to do.
Okay, let's go to Moscow now. And joining us is Tony Halpin, Bloomberg's Russia government editor. Tony, what has been the reaction then in Russia to the measures announced by the UK, the EU and the US?
Well, it's fairly muted so far, partly, as you say, because there's a public holiday. But the Kremlin did express disappointment yesterday about the German decision on Nord Stream 2, and they hope that it would be temporary. That's a very significant project for Putin. It has a lot of political significance for the Kremlin because it joins Russia and Germany more tightly together, even as the Kremlin says there are no political aspects to it and it's a purely commercial project. But for the Kremlin, I think that's the one standout sanction, the question over Nord Stream 2's future.
Okay, Tony, we have actually live pictures now of the Russian President Vladimir Putin at what looks like a memorial in Moscow. We'll get more details on that. But you can see the live pictures there of President Vladimir Putin in Moscow currently. And in fact, he's laying flowers at the tomb of the unknown soldier in the Russian capital. Russia is celebrating the Defender of the Fatherland Day. It's the main holiday of the Russian army. Tony, where do we expect things to go now? What are the options that Putin is looking at, both militarily and economically?
Yes, well, in a video message this morning, Putin said that Russia remains open to diplomacy in the current difficult situation, but he also underlined that he'll defend Russia's interests. And while he said he hasn't sent troops so far into these separatist zones that Russia has now recognized, he says he can do, and he has the authority to do so. So I think at the moment it's a bit of wait and see. Both sides are waiting to see what the other will do and what the extent of the actions that have happened so far mean for the future crisis in Ukraine.
Okay, Tony Halpin, Bloomberg's Russia government editor on the ground in Moscow on the Russian reaction to those Western sanctions and what might be the next moves for Vladimir Putin, who is currently in Moscow at that ceremony. Okay, joining us now is Raffaella Tenconi, chief economist at Wood & Company. Raffaella, thank you for joining us this morning. What is your assessment of the economic implications of what is unfolding in Ukraine and the sanctions on Russia, the economic impact on Europe?
Good morning, everyone. I think what we're seeing is worsening of a very serious energy shock. As we've been said, this is our first episode. We're probably going to see further escalation. So we're likely seeing oil prices and eventually food prices rising. So we see material upside in the short term and in the medium term to inflation, particularly in Europe. We think the market is underestimating how much the ECB will need to react. And the catch here is that the oil price shock will have a material impact on Eurozone growth, but we may not necessarily see its full extent because it's to some extent camouflaged by the credit cycle and whatever fiscal measures the Eurozone governments will introduce.
Okay, so how do you fold the inflationary picture, that inflationary shock, the fact that you think that the central bank, the ECB, is behind the curve on this? How does that play into the forecast, your forecast for growth for the Eurozone as we look ahead to the end of the year?
Well, at this stage, we haven't changed our projections yet. We have Eurozone growth at 4% this year. But we think you could see up to a 1% downside. It really depends in Eurozone in particular how much subsidies we are going to announce to essentially offset the impact to households and the corporate sector in particular, because that is where the area, particularly where unemployment could surprise to the downside. Another aspect that I think is materializing in the last 24 hours is that we expected euro to strengthen over the course of the year because Eurozone business cycle was doing well. But of course, if the energy shock is going to hit them more, then euro appreciation may not materialize. That's going to compound the problem for the ECB.
Where does that leave your views on currencies then? Where do you want to be positioned, Raffaella? If you don't like the euro as much as you once did, is there a currency that you prefer to be exposed to?
Well, right now, actually, I would prefer sterling because our fair value model for sterling against euro signaled that it's fair value. But I think in the grand scheme of things, Actually, the UK is doing better in the short term on the economy. There is still a rate cycle taking place by the BOE. And really, very much importantly, is that the government is beginning to deploy the policy responses that the country needs to adapt to digitalization. So I think that makes the UK attractive for the long term. You will see capital more clearly coming into the UK. So I would prefer to be in sterling right now.
Interesting. We are hearing from the BOE Governor, Andrew Bailey. He's given testimony in Parliament today saying that the UK economy faces two-sided risks, that the risk that inflation falls quicker than expected. He wants to get inflation back to target. We'll bring more lines as they cross, as Andrew Bailey, the BOE Governor, continues that testimony. Raffaella, when it comes to corporate profits then, and you pointed to the potential pain point here, particularly if you don't get additional support subsidies for the corporate sector on the back of these very high inflationary pictures, or inflationary numbers. Where do we stand in terms of the health of European corporates? The earnings season has been relatively solid. Where does that take us through to the quarters ahead?
Yeah, I think we're most likely pretty much at the best of time for the business cycle in terms of corporate earnings. Our models suggest that you're likely going to see a deceleration in terms of growth going forward. And that is partly due to the fact that demand is going to hold back and costs are really rising very materially. So I think when you look at the numbers, the data that we have for February so far, it's very strong. So right now the economy is doing very well. But when you fast forward 6 months or maybe even 9 months, I think you will begin to see the crack. And one point that I would like to stress is that don't forget that you could see a very positive surprise for summer because we are reopening for COVID. But again, this is part of the best of the last bit of the business cycle.
Okay, Raffaella Tenconi, Chief Economist at Wood & Company, thank you for those insights. Like sterling, I think there's some upside support for the pound. Currently, sterling at 1.36, just up 0.1%. Euro dollar at 1.13. We want to check on some of the Russian equities trading here in London for you. Hopefully we can bring those up to show how those are performing. It's a national holiday in Russia, so the main benchmark Moscow index is closed for the day, but you do have the banks, a couple of the big banks, Sberbank and VTB, which, by the way, US officials have flagged as possibly in line for additional sanctions if things escalate. Those are trading in London. Intraday, you can see Sberbank down at 2%. VTB Bank down 1.5%. Okay, let's move on then and tell you what is coming up. We have been talking about the fact that BOE Governor Andrew Bailey is giving testimony, and we'll have more on that in the minutes ahead. We're also going to be speaking to the former British ambassador to Russia, Sir Tony Brenton, to get his views on the Ukraine crisis and the UK response. That is next. This is Bloomberg.
the UK is sanctioning the following 5 Russian banks: Rossiya, IS Bank, General Bank, Promzyaz Bank, and the Black Sea Bank. And we are sanctioning 3 very high net worth individuals. This is the first tranche, the first barrage of what we are prepared to do.
UK Prime Minister Boris Johnson has come under fire for issuing what some call pea-shooter sanctions on Russia. Mr. Johnson insists that the measures are an initial set of penalties. Joining us now is Sir Tony Brenton, former British ambassador to Russia and fellow of Wolfson College, Cambridge. Tony, thank you very much for joining us this morning. We're very pleased to get your insights, particularly given your experience working with or working alongside or experience with the Russian President Vladimir Putin when you were based in Moscow. Let's start, though, with your views on the sanctions reaction from the UK, the Europeans and the US, and what you make of the sanctions so far. And the framing that we had from Joe Biden, this was the initial tranche.
Yeah, I think that's very sensible framing, because lots of people, of course, are talking about a big invasion coming up. I'm dubious about that, but that's what lots of people are talking about. And it makes sense, therefore, to save your heavy artillery to try to deter that big invasion if it's genuinely contemplated. Here in the UK, it has to be said that the sanctions package that's been announced has been received pretty unenthusiastically by the political classes. I mean, our politicians, as you've no doubt seen, have been very loud on the need to be tough with Russia. But actually, as we've seen the various sanctions packages emerge from the United States, from the EU, and from London, the London contribution does not look overwhelming. The 3 high-value individuals who we have chosen to sanction have all already been sanctioned by the United States for several years. And the banks also look pretty small and marginal.
How potent could the UK sanctions be? And do you expect the financial sector, Russia's financial sector, to ultimately come into the spotlight and under fire?
Well, yeah, I do. I mean, there's an awful lot of noise going on here about ending what's been called the London laundromat for Russian dirty money. And it's pretty clear that the government are looking at some quite serious measures to bring that under control. We don't yet know what those measures will be. They've talked about serious measures before. We introduced things called unexplained wealth orders, which have so far not touched a single Russian. There's a very firm intention here to go for that. And given that an awful lot of very rich Russians, including some no doubt corrupt or closely linked to Putin, have placed a lot of money here, that may well have a bit of an effect.
Is it your sense that there are any penalties, there are any sanctions that the West could draw on, the UK, the US, its allies in Europe, that could change the behaviour of President Vladimir Putin, who you got to know to some extent when you were in Moscow?
The answer to that question is no. We've been running quite serious sanctions on Russia since 2014. The Russians have shrugged them off. Their economy isn't doing brilliantly in growth terms, but has become very robust and tough against further rounds of sanctions. And the important thing, we're going to see more sanctions, I suspect, but they've equipped themselves to deal with them. But the important thing to understand about Russia and about Putin and about those around him in the Kremlin is that they are much more concerned about national security than they are about Russian economic prosperity. If I were working in the Kremlin and I went to Putin and I said, "Sir, we're threatened by serious sanctions from the West. Maybe we should back away from, trying to prevent Ukraine joining NATO," I would spend the rest of my career counting paperclips in Siberia. They care about security. They see Ukraine joining NATO as a genuine threat to their security. They're not going to let Western sanctions get in the way of that.
Are the Baltic states under threat at this point?
No, of course not. They're members of NATO. NATO spends about 10 times as much as Russia does on its military. The Russians are not going to attack NATO states because they know they would lose the subsequent war. It's quite striking to me that we, the West, you in the United States and we in the UK, are busily sending troops and so on to countries like the Baltic states, which Russia has no intention at all of attacking.
Interesting. So, Tony Brenton, we appreciate your insights, former British ambassador to Russia and fellow of the Wolfson College, Cambridge, and of course, views there on the UK's response in terms of the sanctions and of course the ultimate aims of the Russian President Vladimir Putin. Thank you for your time. We do have Andrew Bailey, the Governor of the Bank of England, giving testimony in Parliament. Of course, investors are passing any commentary. That is not Andrew Bailey, but that will be one of his partners and, of course, colleagues at the Bank of England. But of course, investors are looking for any comments and any clarity on how hard and how fast the Bank of England is prepared to go. They've hiked twice. There's an expectation, it's pretty much baked in to the markets. It's, at this point, you're going to get another hike in March, but how aggressively, given that there was some debate over 50 basis points. And of course, Bailey has said that the pressures around inflation, getting inflation back to target, is a key priority. Higher prices leading to higher rates. And so the inflation conundrum here in the UK, of course, pronounced. And we're seeing that reflected in higher wages, but wages still, when you take into account inflation, in negative territory. So we'll be keeping across that for you as the Bank of England governor continues to give testimony, saying the poorest will be hit hardest by rates and inflation. Okay, let's get your Bloomberg Business Flash now with Leanne Gerrans. Leanne.
Its mask requirement at most retail stores across the US following reduced COVID-19 cases and changes in local mandates. The iPhone maker is also ramping up for the return of its in-store classes. The company has updated its website to reflect which locations are no longer requiring face coverings. Apple's workers will still have to wear masks. Now, Rio Tinto, the world's top iron ore producer, has said annual profit almost doubled to a record, driven by a strong demand from China. Underlying earnings were $21.4 billion in 2021, up from $12.4 billion in the prior year. We'll be speaking to the CEO Jakob Stolzholm later this morning. And that's your Bloomberg Business Flash. Tom.
Leanne, thank you. Coming up, carrots and sticks, we take a look at Goldman Sachs' plan to hang on to top talent. That is the subject of today's Big Take. That is next. This is Bloomberg.
Has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London. We bring you live pictures of the Bank of England Governor Andrew Bailey giving testimony in Parliament as investors gauge and look for any clarity on where the Bank of England is standing on additional rate hikes. Let's listen in.
And I just want to reinforce what I said earlier. The real risk here, and this is why I understand why it's misinterpreted what I said about CareWorks, but can I say again, the real thing that worries me here is that it's those with least bargaining power in the labour market that lose out in this situation, because you've got this shock to national income. It's got to be I'm afraid it's going to hit us as a nation, and in a labour market which of course operates as a market, that's important. It's those who have got least bargaining power that get the worst outcomes in that.
But isn't the problem is it doesn't act as a market? In the case of carers, we see huge shortages. Sorry, Angela. We see huge shortages. People can't be cared for. People can't get places in residential care homes. And at the same time, people's income is in decline relative to the costs they have to pay.
And there's about to be another huge decline, given the cost of living squeeze that we know is coming.
Well, can I just try and separate this? Because I think what you're saying is that some parts of the market work less well than other parts of the market, and I'm not going to disagree with you on that. And what we're also seeing, by the way, at the moment is a market that's functioning with more people moving jobs, I think, to increase their pay. I think we're observing the churn has gone up. So, in a way, I think what you're saying is not at odds with what I'm saying, that there is a real concern here that those with the least bargaining power in the market end up absorbing the larger part of this external shock, and that concerns me.
There's no sign of a wage price spiral at the moment, is there, given that there's been 14 years of stagnation and real wages are actually going to decline in the next period, probably by quite a lot?
Well, I frankly prefer not to.
OK, the BOE Governor Andrew Bailey, they're giving testimony in Parliament, being grilled on the question of wages. Of course, there was some controversy when he made some comments to the BBC a few weeks ago about and suggesting that people shouldn't ask for higher wages. He has come out and said that he's not saying people shouldn't get a pay rise. Also, the Bank of England Governor is saying there is clearly an upside risk to inflation, to inflation, and saying that restraint is needed on setting prices. You can get more on this on the live terminal, of course, on the terminal on MLive, if you want to hear more from Andrew Bailey. Stay with us. Bloomberg Surveillance Early Edition continues in the next hour with Matt Miller and Kaylee Lyons in New York and Anna Edwards here in London. Your markets here in Europe, risk on, future stateside bond gains of between 1 and 1.3%. This is Bloomberg.
nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes. Según las modelizaciones, nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
We came into the year thinking that this was going to be a very tumultuous year, and you throw in the Russia-Ukraine tensions, and now, you know, seriously, every single headline is creating an aggressive move.
Vladimir Putin is somebody who we've known for a very long time, has very strong views on Ukraine. Can he be deterred, I think, is the question that many of us are wondering about.
The base case scenario is to find some sort of a compromise through sanctions that won't be too aggressive.
I don't think Fortress Russia could necessarily handle the full salvo of Western sanctions.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Wednesday, February 23rd. Our top stories today. President Biden's first round of sanctions on Russia lands with a thud. Markets respond with a shrug, and Congress demands that the president does more. Even bulls are ready to change their outlook now. The S&P 500 is down more than 10% from its record high at the start of the year, and commodities investors are waiting to see what happens next in Ukraine. Plus, Goldman Sachs plays hardball. The firm isn't just paying biggest bonuses to keep executives from leaving, it's also turning the screws on those who do. Lots to discuss this morning, then welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards, live in London with Matt Miller and Kaylee Lines in New York. And I suppose emphasising the downsides there and what many people see as the downsides for markets from here. Kaylee will have further analysis of that. But for today, if you look at the sanctions environment, call it underwhelming or landing with a thud, you could just say it's gradual. It leaves space for risk assets to rally in the short term.
Yeah, the markets so far, Anna, mostly shrugging it off. And that was definitely true in Asia overnight, where it was a much more positive session than we saw on Tuesday. Overall, the MSCI Asia Pacific Index was up about 1/3% or so. Japanese markets were closed for a holiday, but China was trading, as were Hong Kong. Both of those regional benchmarks were higher. And of course, the move in Hong Kong was led by technology. The Hang Seng Tech Index up about 1.4%, snapping a 3-day losing streak. Though the small rebound we saw today only goes so far to help ease the 8% declines we had seen over the prior, if I can get my words out, 3 sessions. Now, there was also a lot of action in the bond market as well, specifically in New Zealand, where we saw another quarter-point rate hike to 1%. Plus, the RBNZ said that they see rates at 2.5% by early next year. So that had a dramatic reaction in the short end of the curve in New Zealand. That 2-year yield up 13 basis points to 236, the highest since December of 2016. And that also rippled through the curve in Australia. You saw the biggest move in the belly of the curve, that 5-year yield up about 8 basis points, 199 where we now sit, and that is the highest in about 3 years, Matt.
All right, Kaylee, thanks very much for that. Now, we did see the U.S. stock market go into correction territory officially yesterday. Danny Berger's going to show you that chart in a little bit, but we're looking at a little bit of a bounce right now. S&P futures up about 0.9%. As Kaylee said, markets responded kind of with a shrug to the gradual, I guess you could call them, if they follow with more sanctions that the U.S. and Europe put on Russia. The Bloomberg U.S. dollar index coming down 11.72. Remember, this is a safe haven, so when it comes off, it means risk on, and that's certainly what we see today. The same is true with bonds. 196.86 is the yield, which is relatively high, but investors are selling them off today, and that's why the yield continues to rise. And Bitcoin, also a risk indicator right now, up 2.6%. It is at 38,888. Whoa, that could be lucky. I will mention that, you know, we saw it at 45,000 last week, so it's come down substantially. Still, my focus not on cryptos today. Anna, I'm very excited. Deep tease for an interview that we have later on this morning. Can you guess what it is?
I'm guessing it might have something to do with cars. That's not taking too big a gamble when I say that. Matt, you mentioned, and Kaylee, you mentioned, and I was mentioning, in fact, in the headlines, that markets react with a shrug to the sanctions, maybe more than a shrug, maybe actually a little bit of relief in there. We certainly saw that in some of the Russian banks that had been rallying as it seemed to become clearer that maybe the smaller Russian banks were going to be targeted by sanctions rather than the larger ones. Russian assets, Russian equity markets that closed today for a public holiday, I should point out. But the rest of Europe then rallying with that same shrug, with that same sense of relief, perhaps, that the sanctions don't go deeper at this point. Room for the risk story to run in at least the short term. Let's roll over and show you what we've got on oil prices, though, because here we're seeing an interesting dynamic. I was talking about Brent crude at $99 yesterday. We're down at 96. Some of that is risk coming out of the Russia-Western tensions. At least maybe you can read that into some of the softer sanctions story. But there's also the Iranian lines coming through. We've heard from the Iranians just in the last half hour or so, 40 minutes, talking about how they're kind of hopeful that we get a deal on Iranian oil coming into the market. We'll see what that can do in terms of adding some downside pressure to oil prices. A couple of companies, this might be the one that Matt was talking about earlier. A couple of companies, I'm pointing for radio listeners, I'm pointing at a car company, Stellantis. A couple of companies reporting record profits this morning here in Europe and being rewarded as a result. In the financial services sector, Barclays coming through, that stock up by 1.8%. It's the M&A bankers, those doing advisory. That's where we're seeing some of the strength coming through. They lost down some FX hedging. Venkat, the new CEO over at Barclays, CS Venkatakrishnan, to give him his full title, his full name, he's not too perturbed by that. And the company returning cash to shareholders as well. Stellantis is less about the volume and more about the luxury end of things, it seems, Kaylee, when it comes to production of cars in this particular sector. And certainly that's been the story for Stellantis last year. And they plan to keep that focus on the sort of higher end autos as we go into this year.
Well, and of course, we'll be speaking with the company's CEO later on this hour. Matt Miller's excited, so am I, Anna. Now, as for what is ahead, not just this hour, but all day today, we will get more earnings here in the U.S. on the retail front. Lowe's will be reporting before the markets open. Very interesting as it follows its peer, Home Depot, which disappointed yesterday and had its worst day since 2020 as a result. Then on the geopolitical front, NATO chief Jens Stoltenberg and Dutch Prime Minister Mark Rutte will speak at the NATO seminar in The Hague at 10:30 a.m. New York time. And finally, on the economic data front, we will get U.S. MBA mortgage applications at 7 a.m. New York time, Matt.
All right, now markets, as we've been saying, appear to be underwhelmed by President Biden's first round of sanctions on Russia, or maybe they're relieved. The sanctions targeted a pair of Russian banks as well as 3 members of Russia's elite. President Biden announced them yesterday.
We're implementing full blocking sanctions on 2 large Russian financial institutions, VEB and their military bank. We're implementing comprehensive sanctions on Russian sovereign debt. That means we've cut off Russia's government from Western financing.
Bloomberg Washington correspondent Anne-Marie Horder joins us now from D.C., as well as our European correspondent Maria Tadeo out of Brussels. Anne-Marie, we'll start with you. These sanctions were not as swift and severe as the U.S. had promised.
No, but the president made clear yesterday this is tranche one. But Matt, you are right to point out the criticism that the administration faces that these were just maybe too incremental, and could they or should they have been harsher? That is a question that is certainly swirling around Washington. But similar to what the UK Prime Minister Boris Johnson says, the president says this is tranche one. And Dalip Singh, the president's principal deputy national security advisor when it comes to finance and economics, he has said this is the beginning of an invasion and this is the beginning of our response. We are ready to press a button to the action on the two largest banks that they are now talking about. One senior administrative official said the U.S. is specifically considering actions against Sberbank and VTB banks if an invasion were to proceed. So they are continuing this deterrence strategy. There are some sanctions in this phase one, we can call it, but then they have more ready to go if there's a further invasion of Ukraine.
All right, Anne-Marie, that's deterrence. Let's now talk about diplomacy. U.S. Secretary of State Antony Blinken says his planned meeting tomorrow with Sergei Lavrov of Russia has been canceled. Listen to what he said yesterday.
Now that we see the invasion is beginning and Russia has made clear its wholesale rejection of diplomacy, it does not make sense to go forward with that meeting at this time. I consulted with our allies and partners, all agreed.
Anne-Marie, was that the death knell for diplomatic effort?
Well, Tony Blinken, Secretary of State, also said in those same remarks that the U.S. remains open to diplomacy, but they want to see steps that Russia will take that the international community can all gather around and agree that these are steps to claw back those troops, and they're serious, in his words, about de-escalation. And then they remain that would be the only way forward when it comes to diplomacy. But we should note, there was already parameters going into this meeting. Ned Price, the Secretary of State's spokesperson, said this meeting will only happen if there's not an invasion of Ukraine. And clearly, the U.S. government yesterday was saying that President Putin, recognizing those two separatist states, the so-called self-republics in Donetsk and Luhansk, they're calling that an invasion.
Anne-Marie, thank you very much. Bloomberg's Anne-Marie Horden in Washington. We're just seeing a red headline across the Bloomberg, which I should bring to your attention. It says that Ukraine is seeking to declare a nationwide state of emergency. Let's stick with the ongoing politics surrounding this, of course. Maria Tadeo is in Brussels with the latest on the European response. And Germany halting Russia's controversial Nord Stream 2 pipeline, Maria. I mean, this is not something that is in operation right now, but it is incredibly symbolic around a pipeline that was really a priority for President Putin.
Yeah, it was. And Anna, just to pick up on that headline that you mentioned, of course, Ukraine saying perhaps we're entering into a state of emergency. But today also they said that reservists in the army would have to get back in line. And also they're approving legislation that would facilitate for ordinary people to have weapons. Of course, this does show that the situation on the ground, Anna, still continues to be incredibly tense. Now, on the Nord Stream 2 pipeline, yesterday we heard that finally from Olaf Scholz, the conditions to approve this pipeline, they're not right at the moment. We can't go ahead with this project. Now, we could be perhaps even cynical, critical of German policy and say that, of course, Nord Stream 1 is still working operational every day. The Germany has bankrolled the Russians for years. But I think we really need to stress here that this is a big departure from Angela Merkel. Remember, Angela Merkel, for many years, her doctrine was that politics, business, and trade are separate things. Yesterday, from Olaf Scholz, it was the opposite. He said it cannot be business as usual. This time, it's peace at stake. We cannot have normal business relationships with Russia at this point.
All right, so that is, of course, what Germany has decided to do. We've seen sanctions out of the EU, the UK, the US on an individual country or country group level. What about NATO? Jens Stoltenberg, the chief of NATO, says Russia is still planning a full-scale attack. What will be the response from the alliance in that event?
Well, Kaylee, for the time being, we're seeing that they are deploying more troops in the Baltics. The Baltics, by the way, the three countries, Lithuania, Estonia, and Latvia, will be visiting Ukraine as a sign of support today. They welcome those troops. But I think going forward, what we're going to see is NATO operations that become bigger in number, but also longer in time. This is not going to just go back to how it was in a few months' time. That is very clearly the message from Stoltenberg, who's saying, actually, we're entering into a new phase of European security. And this is a very grave situation that we're seeing at this point. This threat of full invasion going into Ukraine has not gone away, and we're particularly worried, by the way, of Belarus. Remember, Lukashenko, the leader of Belarus, the other day said we would welcome nuclear weapons. If Russia asks for a favor, then we'd say yes.
Wow. All right, Maria, thanks very much. Maria Tadeo there in Brussels, and thanks to Anne-Marie Horden in Washington, D.C. as well. Now, the technical backdrop for stocks is deteriorating so much that some bulls are even preparing to change their outlook. Strategists are now forced to price in escalating tensions between Russia and Ukraine, as well as a hawkish Fed. Let's get more with Bloomberg's Danny Berger. Danny?
Well, Matt, I do just want to, at the start, say that there are some people out there who point to things like earnings still accommodative environment as saying, okay, my bullish case is intact. But now that we have that out of the way, let's talk about the pessimism that's building in this market. We've seen, for example, the S&P 500 yesterday fall 10% from its peak. The technicians are worried. We've fallen well below the 200-day moving average, what one technician called a stock market teetering on the edge of support. We also have a yield curve that it's at its flattest in 2 years, suggesting that there's concern about the economic environment as we have all of these issues swirling around. And look, you could look at a day like today and say, okay, equities are rallying, perhaps there's not that much fear. But people who are worried about the price action, I think, are really well reflected in what Rich Ross over at Evercore ISI said, who I should say also sees a 20% decline due to these deteriorating internals. He says, while ephemeral relief rallies will occur as the conflict ebbs and flows, the seeds of the current decline were planted by policy in the pandemic long before troops amassed on the border, Anna.
Yeah, that's interesting. That chart certainly looked very scary,
Yes.
Danny. The only color available apparently is red. Let me ask you about commodities. Jumping on the Ukraine crisis, of course, and this isn't just energy. In fact, the energy story a little bit more different today. But yes, there's energy, there's wheat, there's nickel, there's cooking oils. The Bloomberg Commodity Index at new highs.
Exactly, the spot price at new highs. Ukraine is seen as the breadbasket of Europe. It's the second biggest grain producer. You mentioned some there, wheat, sunflower oil, but also metals are important in the region as well, exports of aluminum and nickel. All of that is adding to already concerns of high inflation. We saw 2-year TIPS break-evens reach their highest level since Bloomberg started collecting the data in 2004. So all of this contributing to an environment that supply chains are already of concern. Now the question is, will we start to see exports from Russia of commodities be diverted away from North America and Europe? Does this environment, which so many central banks are already grappling with, get even worse, Kaylee?
All right, Danny, thank you so much. And we're just getting a headline from the BOE Governor Andrew Bailey saying that the Ukraine situation adds to risk that energy will rise and inflation risks coming from the energy price. That and the commodity story all really feeds together. Now let's get back to the U.S. markets and take a look at some stocks moving in early hours. A big one to the downside is CoStar. This is a commercial real estate information company, gave a current quarter and full year outlook that came up well short of expectations. And as a result, that stock absolutely plunging to the downside, down a whopping 26% in early hours. Another stock moving to the downside, and this is in some way tied to the crop story, is Mosaic. This is a fertilizer company. It also missed on expectations on both the top and bottom line, really struggling with supply chain issues, and says actually sanctions in Belarus could make that supply situation worse. That stock is down about 6% before the bell. One more positive story, though, is Nubank. This is the Brazilian digital bank backed by Warren Buffett. It posted a surprise profit. Analysts were looking for a loss. Maybe throws a little bit of cold water onto the bearish thesis for this company. That stock is moving up the better part of 11% before the bell, Anna.
Kaylee, coming up on the program, from geopolitics to central banks, we'll speak to Caroline Simmons, UK CIO at UBS Global Wealth Management. We'll join a few of the dots for you this morning. And earnings exclusives, we will speak to the CEOs of Rio Tinto and Stellantis, plus Goldman's struggles for top talent, how new pressures are leading to strained exits at the banking powerhouse. More ahead on our big take story. This is Bloomberg.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Season continues.
To the metaverse, to Spotify, to Qualcomm and beyond.
Bloomberg is fastest with the numbers and analysis.
Peloton becoming a proxy for this pandemic.
I think there's tremendous opportunity.
Bloomberg, the fastest numbers and analysis you trust.
Welcome back to Bloomberg Surveillance Early Edition. We are simulcast on both Bloomberg Radio and Bloomberg Television. I'm Matt Miller here in New York with Kayleigh Lyons, Anna Edwards with us out of London. Now, Daniel Curtis, our star graphics producer in London, put together this chart for me, and it shows a highly selective portfolio of value stocks in white and high volatility stocks, the big momentum stocks in blue, and it goes over the last year. You can see that value stocks have really outperformed. And we're going to talk right now with Caroline Simmons, UK CIO at UBS Global Wealth Management out of London. And Caroline, you think this outperformance will continue as long as bond yields keep rising?
That's right, yeah. That's very much what the dynamic is that we've seen this year as the bond yields have risen and the expectations for interest rate rises were brought forward, that has driven very much this value play, which is, significantly underperformed for very long periods of time, is now getting its outperformance time.
And you think that continues then, Caroline? And if so, to what extent?
So I think it continues as long as bond yields rise. Obviously the rising of the bond yields is causing a derating of the longer duration growth assets. So until bond yields stop, then value is likely to outperform. Exactly when that happens, obviously harder to know on the timing, but in terms of levels, I mean, for the US 10-year, for example, we think it gets to about 2.3%. So, those are the sorts of levels that we're looking for. Obviously, we've had the largest part of the move for the bond yields and therefore probably for value, but there is still some further upside to go.
Okay, and it could be that the geopolitics gets in the way of some of that, Caroline. We've seen the geopolitics, of course, push people into bond markets and keep a lid on those yields in treasury markets. You still see full conflict as a tail risk, and I mean, neither of us are perhaps strategists around the military tactics here. But if you do see, why do you see it still just as a tail risk? I suppose is one question. And if we did see full conflict break out, what would that do to oil prices and to stocks, Caroline?
Yeah, so I mean, we view it still as a tail risk because ultimately the cost socially and economically of a full conflict is very damaging to all sides. So I'm not sure that any particular side's actually aiming for that. In terms of if we did get a full conflict, then our assumption is that the oil price would move up quite significantly. We've modeled it at $125 a barrel. That then would take about 0.5% off global GDP growth. And that could lead to global equities falling 10 to 15% as the initial response. We would then see, if central banks or other actions are taken. But that's the sort of tail risk scenario.
Well, on the subject of global equities, Caroline, we just talked about the value trade kind of on a sector level as it relates to rate sensitivity. Europe has been, to some extent, a beneficiary of that value rotation. Is there a threat if you see a more persistent energy crisis in Europe start to be a threat to growth due to some of the geopolitical situation, that Europe actually is going to be a laggard once again?
Yeah, it's sort of interesting. So obviously Europe benefits from higher oil prices, the UK particularly, which has quite high exposure to energy. So on the one hand, it would benefit if sort of geopolitics caused oil prices to continue to rise. But obviously, if that were to lead to significantly higher risk concerns about the scale of a potential conflict and the impact that could have on growth, then obviously being a cyclical market, the Eurozone, would also suffer.
And on the subject of the Eurozone, as it relates to ECB policy, do you think more aggressive action is more likely if the situation unfolding between Russia and Ukraine proves to be inflationary, or does that give them an excuse to maybe sit on hold for longer?
Yeah, so, I think the initial sort of drivers, if you like, for the ECB are going to be wanting to see what happens to the impact when they've finished ending QE and the TLTRO. And then, if oil prices are a little bit higher because of geopolitics, I think they'll probably look through it. If we are in some sort of much more severe conflict scenario, then perhaps that would have an impact on rate rises because it would have an impact on the growth outlook. But I think just with oil prices as they are now, in the sort of situation that we are now in, I don't think that particularly has much bearing actually on the ECB's sort of timing of rate rises. We'll find out more in March when they provide their inflation forecasts.
Yeah, we're all waiting for March. Thank you so much for providing us some of your insight this morning. That's Caroline Simmons of UBS Global Wealth Management. Now let's keep you up to date with news from around the world, and here's your first word. The fortunes of Russia's super rich have fallen $32 billion this year, and sanctions from the conflict in Ukraine are likely to destroy even more wealth. Gennady Timchenko heads the list of Russian billionaires who've seen their fortunes drop. According to Bloomberg, the Bloomberg Billionaires Index, almost a third of his wealth has disappeared this year. He now has a fortune of about $16 billion. In Hong Kong, the government is trying to offset the toll of the escalating virus outbreak that has taken on the economy. Eligible residents will get almost $1,300 in spending vouchers. Authorities have also earmarked more than $2.5 billion for other antivirus needs. Hong Kong's economic growth is expected to slow to as little as 2% this year, following 6.4% in 2021. Apple has dropped its mask requirement at most retail stores across the U.S. That's following reduced coronavirus cases and changes in local mandates. Apple's also ramping up for the return of in-store classes. The company is preparing to launch new versions of the iPhone, iPad, and Mac. And Barclays has posted its highest annual profit on record. The British bank steelmakers had a busy end to the year that helped offset a slump in trading activity. In the fourth quarter, income from Barclays capital markets and merger advisory work rose 27%. And Anna, I know you've been following this Barclays story very closely. The shares getting a lift in the European trade on the back of those earnings.
Yeah, even if there were disappointments around some of the trading revenue and certainly FX exposure didn't go the way that the bank wanted in certain instances, or some of their trades, hedges around FX didn't go how they wanted them. The CEO putting those to one side and focusing instead on other matters. The banking sector in focus, once again, Matt, it was the M&A bankers who were doing well here. It was a story that we've seen at other places about how deal makers and those who give advice are the ones on Wall Street and in the banking executive suites here in London that are bringing in the pounds or the dollars.
Yeah, absolutely. I mean, M&A was at a record. In fact, a lot of the earnings reports that we see out today beg the question, have we hit a high watermark? We got some incredible profit margins, incredible net profits, really high revenues from a lot of the companies that we're talking about, Stellantis, Rio Tinto, Barclays, et cetera. And the question is, can that continue?
Absolutely, and that is certainly a question we will put to the next executive that we speak to. Our earnings exclusives keep coming. We'll speak with the CEOs of Rio Tinto and Stellantis. Rio Tinto delivering record profits. Can they last? This is Bloomberg.
know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition, and here's what you need to know. President Biden's first round of sanctions on Russia for its actions in Ukraine hit the markets with a thud. The sanctions targeted a pair of Russian banks as well as 3 members of Russia's elite. Members of Congress from both parties say the White House should do more. S&P 500 charts are looking pretty bad. Even bulls are looking to adjust their bets. The index fell for the 3rd straight day on Tuesday. It's now down more than 10% from its record high at the start of the year. Meanwhile, commodities investors are waiting for the next twist in the Ukraine crisis. Everything from gold to wheat took a calmer turn today. And Goldman Sachs plays hardball. The firm isn't just paying the biggest bonuses to keep executives from leaving, it's also turning the screws on those who do. Goldman is now considering the so-called nuclear option of confiscating vested stock of some who leave the bank. That's usually reserved for cases of misconduct. We'll have more ahead in today's Big Take story. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. Matt, we talked about where the markets are. Actually, a pretty decent picture, though, today in the very short term.
Yeah, a little bit of a relief rally after we closed in correction territory yesterday. The S&P closing down 10% from its highs, but now you can see we're bouncing a little, up 0.8% on futures if this holds. But you do see a lot of risk on indicators elsewhere. The Bloomberg Dollar Index down, so no one's seeking safety in the greenback. Treasuries also down, so the yield is rising right now, 197.03. Investors don't need the safety of U.S. debt right now. And Bitcoin is up as well. It is well off the highs that we saw last week, but still up 2.6% at 38,882. So it looks like it could be a little bit of a rally today.
All right, Matt, well, you're definitely seeing some reaction to that move in Bitcoin when it comes to the individual equities trading before the bell here in the U.S., in that a lot of those crypto-tied stocks are getting some relief this morning, one of them being Coinbase, which fell pretty hard yesterday. It's up the better part of 3% in early hours today, though. And you're also seeing a rebound in a lot of those big tech names after the declines of Tuesday. Tesla, for example, fell more than 4% in yesterday's session. Today, though, it rebounds by about 2.25%, and that's true with a lot of those large-cap tech companies. There's also some earnings stories out there, one of them being Nubank, which is the Brazilian digital bank. It's backed by Warren Buffett, reported a surprise profit. Analysts thought it would report a loss. That stock is up more than 10% as a result. And you also have Stellantis, the automaker, moving to the upside. It still sees double-digit margins for 2022, even in the face of those supply-side challenges like that persistent chip shortage. That stock is up the better part of 6% in early hours, Anna. And of course, we are just moments away from speaking with the company's CEO.
Yeah, absolutely. Watching that one move higher in the Europe session. Kaylee, let me talk about the Europe session more broadly then. And the Stock 600, we started out in positive territory and we've kind of lingered there actually for much of this morning, up by 0.8% on the Stock 600. Some of the markets, including the French market, doing very nicely, thank you, up by 1.3%, as a lack of very tough sanctions in at least the short term seems to leave the way clear for risk assets to get a small boost, to rally, at least in the very short term. Thinking about oil prices, we've seen a bit of a retreat in oil prices. We're at 96 or so dollars a barrel right now. 96.27 is where we currently trade. So we are seeing a little bit of a pullback in oil prices, but other energy assets are to the upside. We have seen gas prices and electricity prices moving higher. A couple of corporates to focus in on. We've got Barclays for you. That stock up 2%. We talked about this earlier. The advisory and M&A businesses doing well here. We've also got the Rio Tinto share price in there for you. Just a touch to the downside, down by 0.4%. The highest ever profits from this business. And just like some of the other companies we've heard from, putting out a return of cash to shareholders, but this is really huge, $7.7 billion US. They benefited in 2021 from higher commodity prices. How long can that continue? Let's get to an exclusive interview now with the CEO of Rio Tinto, Jacob Stoutholm, who joins us now live from Sydney. Jacob, thank you so much for joining us. We appreciate your time. Let me ask you about how much of this success can continue then. Record profits last year, but now many people have questions about where iron ore goes from here, iron ore prices. So can you continue to deliver these kinds of results?
Very good questions. Thank you, Anna. First of all, our guidance for this year is that we will have modest growth, supply growth in our production, and there is really good demand for our products. So we have started the year well, but I'm not in the game of predicting commodity prices. They are very volatile. So, but short term, there's a good demand from China, and longer term for a company like Rio Tinto, the metals and minerals that we are producing are really being helped by the energy transition. So the longer term fundamentals looks good for Rio Tinto as well. But I don't dare to predict commodity prices. It has last year indeed been a good year, and it's a record result. What is interesting with our result is it's not just iron ore you're asking about. We also have significant improvement in our aluminium business, in our copper business, and in our minerals business. So you can say the business right now financially are firing on all cylinders.
I think of, a mining company as simply getting stuff out of the ground and selling it. But of course, you got to move it all around the earth as well. How much of your business is logistics, and how much can you improve on those kind of costs after the supply chain issues that we've seen over the last couple of years?
Yeah, thank you. No, look, we are one of the biggest shippers in the world, but it's a fairly simple supply chain, and we have been able to keep it going. I will say to you, though, we have mining, but we have almost as much processing. So if you take, for example, the aluminium chain, it's mainly processing, and there's, of course, quite a lot of shipment as well. It has actually worked surprisingly well. I'm very grateful to see how we have been able to cope with COVID, kept all mines going, and kept producing throughout the pandemic.
The reason I thought of that is one of our BN reporters pointed out that you've got a development on an iron ore mine in Guinea, but you haven't yet got a rail line in place to export it. Can you tell us about how that's going, where you stand on that kind of development?
Absolutely. I mean, Rio Tinto is a very long-term company, so we always have to work many years out in the future. But we are in a joint venture with our Chinese partners. We are working closely with the government and the other consortium to get in place a full project. It's going to be one of the biggest projects in Africa. It's mine development, but as you rightly say so, it's a very long railway and it's a significant port development. But it is a project that could be really beneficial, both for the people of Guinea, but also to the world, because it represents some of the highest quality iron ore that is much in demand for the energy transition. Going towards more green steel, you need the higher grade iron ore.
On a different subject, Jacob, I wonder how daunted you are by the cultural transition that you're trying to bring about, or culture change you're trying to introduce at Rio Tinto. Of course, this goes back to the destruction of ancient Aboriginal Australian heritage, and then more recently a report that talked about harassment at the business, about racism and bullying. I mean, this seems to be quite extensive. Are you daunted by the scale of the challenge ahead?
It is indeed a daunting challenge, but if I look back, we have learned some really tough lessons after the destruction of Juukan Gorge, and I'm very, very proud to see the shift, not just in our leadership, but across the company in terms of how to re-establish relationship, understanding the importance of working closely together with the indigenous people where we operate, the traditional owners of the land. We have really fundamentally changed over the last 12 months in that regard. And indeed, we decided to look deeper into our work culture, and we asked the former commissioner in Australia, Liz Broderick, to do an extensive report that we announced 3 weeks ago. And there were some confronting messages about bullying, sexual harassment, and racism. But we have just decided to be super transparent about it. It's the only way we can address the things. And I must say now, 3 weeks after announcing it, I'm really pleased with the kind of dialogue we have in the company. I'm absolutely convinced that we can address that, not just because there are things that simply are not acceptable going on in our culture, in our company, but it's also about just creating a safer environment where people feel more happy about working, and ultimately will also create a more effective company. It's a big transformation. We can do a number of things immediately, but it's also a longer-term development. You have to be patient when it comes to culture change.
Jacob, thank you very much for joining us. The Rio Tinto CEO, Jacob Stausholm, joining us there from Sydney. Coming up on the programme, we'll keep talking about the earnings stories. They're coming thick and fast today. Another earnings exclusive. The Stellantis CEO, Carlos Tavares, joins us shortly. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
We're going to be operating this as a true luxury company, only manufacturing vehicles to order, and that fruit is bearing, and showing how successful we can be by manufacturing the appropriate demand, supply, and get retailing more cars than we wholesale. So the first step towards a journey which will take us to 10,000 cars by 2025 and a profitability of 500 to 600 million EBITDA.
And that was Lawrence Stroll, of course, the chairman of Aston Martin, speaking earlier on Bloomberg Television, staying on autos but moving to a slightly bigger manufacturer. Stellantis expects to deliver another year of double-digit returns in 2022, despite the supply chain problems that the entire industry is facing. Raw materials costs, tight labor markets here in North America, weighing on operations for everybody. To talk about all this and more is Carlos Tavares, the CEO of Stellantis. Carlos, thanks very much for joining us. I want to start with the same question that we just asked Jacob Stausholm of Rio Tinto. You know, after such a fantastic year, your operating margin, I think, was 11.8%. How can you do better? Was that a high watermark for your manufacturing?
Well, it's the DNA of our company, the DNA of our former families that led to this fantastic brand new company is competition. We love to compete and we love to try to push beyond the limits or go to higher levels of performance. It is in DNA of both former FCA and former PSA, and the record results you have seen in 2021 are just demonstrating that. So of course, in 21, we had a very huge workload with 3 layers of activities, creating a brand new company called Stellantis with a new business governance way, facing all the headwinds that we all know, and preparing for the long-term strategic plan that I will present to you on March the 1st. Despite the 3 layers, we could deliver the performance that you have seen, because we like to compete and we like to do better every single day.
You talk about the families that came together, Robert Peugeot and, of course, John Elkann. Was it a strategic decision to move up into a higher end, into a luxury segment that we've seen here with the Jeep Grand Wagoneer, for example, or you know, the Ram trucks? The interiors have really been the talk of the town. It's moved you into really a higher price bracket.
Absolutely. We are creating a more appeal in our products, being the Jeep brand, the Ram brand. We see that the market shares are growing. We see that we are taking some top spot positions in terms of sales and marketing, which means that our customers are willing to pay for the additional value and the additional appeal of our products. That's quite obvious. And of course, as long as we are meeting our customers' expectations, there is nothing that will prevent us from going that direction. And as you know, we love cars. We love the product. We love the freedom of mobility that they are offering to our customers, and we will keep on doing that. And of course, you can see it on the margins. You can see that the 11.8% record operating income margin is also somewhere related to that premiumness that you have just described.
You're clearly having some success then at passing some of the higher costs on to your customers, Carlos. What about managing the supply chain challenges? What has been the secret to trying to get that right? And what visibility do you have on the supply chain disruptions through 2022?
You are absolutely right. We are in a very specific context of the market right now, because, as you know, there is a significant supply shortage on semiconductors, and that creates some imbalance between the offer and the demand, which is supportive of a pull market instead of a push market, which is positive for the pricing. At the same time, our products are becoming better and better. Their appeal is increasing by the day, and our customers are recognizing that, so it gives us also some pricing power, hence the fact that we have such good margins and such good free cash flows. Now, moving forward, I would say that the situation in 2022 is going to be somewhere more of the same. I think we will continue to have raw material cost inflation. We'll continue to have some semiconductor supply shortage, even though I think the trend is going to be a slow, very slow improvement, but still in the right direction. So we will continue to do things that the others cannot do. We are a very diverse company, and we have a huge amount of synergies coming out of the merger that we can implement, and that is going to give us some additional levers that some of our competitors cannot pull. And you'll see next week when we present the long-term strategic plan that you have some surprises about the new products and about the technology that we are going to bring. So all of this
Carlos,
gives a lot of
when
confidence.
we hear that strategic plan from you next week, can you give us any insight into what plans around China they might entail?
Yes, I can tell you that I will explain this to you on March the 1st in detail. I can tell you that, of course, it is very clear that the first step is to clean the red ink, which we are successfully doing right now, and you can see it in our financials for 2021. And I will tell you more about the way we are going to organize our business in China. Now, be aware that most of our business is in the Western world, in North America, Latin America, where we are the leaders, and Europe, Africa, and the Middle East. So for us, China is only an opportunity. It's an opportunity to do better. It's an opportunity to go even further. And we have learned the hard way some of the things that we should avoid to do in that market. And we are now trying to implement all of those next business models that I will present to you next week.
When we get the new strategy layout. You know, I was talking with Michael Dean from Bloomberg Intelligence this morning, and he pointed out another opportunity that you have is Maserati. That could be a Porsche, a Ferrari, obviously. What do you do to make that a reality with Maserati?
Well, we are doing several things. First, we are making sure that we bring our Maserati quality to another level. As you may see, we are now being extremely severe and very demanding and very rigorous in making sure that we enhance our quality standards, and we make sure that we do not launch any new product as long as we do not match rigorously our most demanding quality standards. That's what we are doing. We are going to unveil very soon our new Maserati Grecale, because we believe that we have reached the right level of quality to launch the product. We will do the same thing with the next GT, GC models in 2023. So first is bring the quality level to the best level of the worldwide market in luxury. That's point number one. Point number two, we see that we are growing the profitability and at the same time the volumes as we are growing our market share in several regions of the world, including China, by the way, and those are very profitable markets. So we are moving in the value creation by doing at the same time increase of volumes and increase in profitability. And as you have seen in 2021, we were able to bring this brand to the black with a 5% operating income margin, which is very low, but it's in the black, which is great news for the team. And we intend to bring this profitability from 5 to north of 15% in the near term. And we think that with the technology that we are bringing, namely on electrification and infotainment, we can increase the value that our customers will be willing to pay. So that's the plan for Maserati.
Thank you very much for your time. Carlos Tavares, the Stellantis CEO, much appreciated. Thanks for talking to us here at Bloomberg TV. Up next, back to banking. Goldman struggles for top talent. How new pressures are leading to strained exits at the banking powerhouse. More ahead in our big take. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Well, let's turn to Wall Street because as firms struggle to hold on to top talent, Goldman Sachs isn't just paying bigger bonuses, it's actually weighing unprecedented action to head off departures with measures like seizing vested pay. Sonali Basak, Bloomberg Wall Street correspondent, joins us now for more on our big take story. Sonali, they're allowed to do that?
Well, what's interesting about this story that is the named executives here, it's Omar Ishmael, David Stark, who moved over to Walmart and to run a fintech started by Walmart, and also Greg Lemkow and Eric Lane. These are lifers at Goldman Sachs. These are people
who went to a client, right? I mean,
that's the heart of the story
Yeah.
here. And the reporting done by Sridhar Natarajan has shown that even though they've moved to clients, they are also rivals. So that line is becoming more blurry, and also long-standing traditions at Goldman Sachs are coming into question, including the rule of 60, where the number of years that you've worked there plus your age would mean you get to keep your vested stock. That relationship is becoming more tenuous.
I mean, Kaylee brings up one of the main questions I had when I read this story. Is it legal? And I'm sure they'll probably push the boundaries a little bit because they want to be aggressive. One of the other questions is in the lead, right? Usually, and Greg Lemkow and Eric Lane, they go to what would be a client and then they turn over business to Goldman Sachs. That's how it's worked traditionally. This nuclear option could destroy that relationship.
Yeah, the details in the story are really interesting too. For example, Michael Dell deciding that he was also kind of upset with how Goldman had also treated its former employees, or the call that David Solomon made to the CEO of Walmart when his employees were poached. So it does create a lot of question marks here about that relationship. But again, I think one really important thing here is not just these four main executives that have spent their whole life there, but anyone in this new generation that is looking for a new job that is not staying at a company as long as they usually are.
Sonali, thank you very much, Bloomberg's Sonali Basak with that big take story. NI Big Take is the function to use on the Bloomberg if you want more details on that. More Bloomberg surveillance is ahead. We will hear from Jeffrey Sachs at Columbia University. Elsa Linos of RBC Capital Markets joins the team. So plenty to talk about as markets continue to rebound this morning. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
Investors are really dealing with what is a trifecta of concerns and challenges.
Seriously, every single headline is creating an aggressive move in the futures.
Volatility reflects current market activity, market participation.
This is obviously a short-term flight to safety, but I don't think that alters actually the long-term growth prospects.
I think now you may have some clarity coming after the actions of the Russian government.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Is Bramo part-time? Tom, she's part-time?
Seriously?
She's full-time?
You're starting that?
She's full-time. She's part-time. From New York City this morning. Good morning. Tom Keene, Lisa Abramowitz is back. I'm Jonathan Farrow. Futures with a bounce up 0.7%. TK, correction at the close on the S&P 500, down more than 10% from the previous peak.
Yeah, I'll go with you. It matters. The NASDAQ 100 down 16-ish% as well. The drawdown right now off futures, John, is maybe not as inflammatory as what everybody's waking up to this morning. More importantly is the movement of 2 standard deviations, and we're not there. We're not at a correction of 2 standard deviations. But, John, I take your point. Negative 10% is negative 10%.
So after the close yesterday, Tom, let's move to the geopolitics. Secretary Blinken cancelling his meeting with Foreign Minister Lavrov. It was due to take place this week. That was widely expected, Tom. What's next from here?
The what next from here is what we heard yesterday from some really qualified guesses. Well, how will Mr. Putin respond to that? I've been going back and forth with Javier Blas this morning on that gas price, natural gas price based out of Netherlands. And okay, it's not what it was at the beginning of the year in the panic, John, which you covered so well, but it's still hugely elevated over the normal of 2020 and 2019.
That's the what's next in Europe. Lisa, let's talk about the what next here at home in the United States. That address from the president yesterday, there was a subtle hint there. This will cost us at home to defend freedom abroad. What are they going to do to offset this? Are we talking about a deal with Iran? Are we thinking about a tax holiday on gas? What are we doing here?
Honestly, I'm not getting a cohesive message because we also got a delay to some of the permits for certain oil and gas exploration in the United States. What is the cohesive message around domestic energy? And then what is the plan to move away from Russian gas at a time when the U.S. has supplied Europe with some, but can't really make up for what Russia supplied?
And if you're just tuning in as well and noticing that bond yields are higher around the world, it started in New Zealand, Lisa. We got a 25 basis point hike, and then the end point for the RBNZ changed. The endpoint went from what, 250 through 3%? They're going to take things higher than they thought previously.
They feel they need to be more aggressive, and this has been the mode of travel that we've heard consistently through a lot of the developed market central banks. At what point does the Fed follow? And I think that one of the key questions is, does the altercation, does the issues that we're seeing between Russia and Ukraine actually accelerate potential rate hikes, force the Fed's hand, because it is inflationary if you see oil prices rise to the degree that some people expect.
Would you like me to say the RBNZ, Tom?
Oh, no,
Is that
no,
what you'd prefer?
no, they say Z
Don't they say
Z in Maryland.
In Maryland. Maryland.
John,
Let's not
never-
offend people
John,
first thing in the
never
morning.
change. Z works. If I say Z,
Z is how
I
we
look
say
like an
it
idiot.
in the UK.
If I say Z, it doesn't work.
Don't they say it like that in New Zealand too? Anyway, futures are higher by 0.75% on the S&P. On the Nasdaq, up by more than 1%. We got a bounce here. Yesterday was a little bit rough, really
it's a nice
volatile
bounce. Come on.
as well. It's a nice bounce. I said we've got a bounce here, Tom.
it's nice.
We're up 0.7% on the S&P. Yields are higher by 3 basis points, 196.86. Some Fed speak with President Daly, Tom, a little bit later.
Curve flattening, John, is important. That
We're in the
sticks out
30s.
this morning.
I'm with you. 2s, 10s, Lisa. 37.
The idea here is that rate hikes are not going to lead to a longer cycle. Even if the New Zealand Central Bank is looking at a potential higher end rate, we're not seeing it in markets in the United States. Today, aside from Mary Daly speaking of the San Francisco Federal Reserve, we also are going to get 7:15 a.m. the Ukrainian President Vladimir Zelensky holding a news conference with the Lithuanian president as well as the Polish president. How much are they concerned about the lack of strict action by the U.S., by Europe? The U.S. sanctions were thought to be somewhat of a softball based on expectations. How much do you get pushback from the Ukrainian president coming out and saying, is that really enough? At 11 a.m., we get NATO Secretary General Jens Stoltenberg and Dutch Prime Minister Mark Rutte. They are talking about NATO's future, coming together at a time when oil prices very much front and center. Can Germany stick to its guns about trying to remain somewhat independent from Russia? Can they stick to their guns about Nord Stream 2 and not going further with that project, given how much energy prices, given how much natural gas prices have been surging? And at 1 p.m., Tom, this is for you, the Treasury is planning to sell $53 billion of five-year notes with yields near the highest levels going back to 2019. What I find interesting, you're talking about yield curves and that yield curve flattening. It's not just the 210 spread. It's the 530s. It's even the 25s. And this really goes to the joint question that a lot of people have. If we bring forward rate hikes now, John, does that mean a shorter cycle, a quicker downturn, frankly, an end rate that is even lower than possibly what it could have been if the hikes were less severe?
Lisa, welcome back.
Thanks.
We missed you.
I'm not part-time. I was taking some vacation for President's Day.
We're just making sure. That's all. Welcome back.
It's good to be back.
Elsa Linios joins us now, Global Head of FX Strategy at RBC. Elsa, here's the situation. Crude just about in the 90s over the last few weeks, pushing 100 on Brent. The equity market down 10% on a closing basis from a previous high. Tensions in Europe, potentially recession in Germany. Elsa, how does the Federal Reserve handle this next month?
I mean, I think the most important thing to remember is that they're making policy for the US, and while they'll be very mindful of developments in the rest of the world, they've also got to be very careful of what's going on at home. You know, at the moment, you've had material upward revisions to inflation since the tail end of last year to where we are today. And while they'll be very mindful, like I said, of the risks and geopolitical risk premium getting baked in, they can't ignore a domestic inflation problem at home.
Elsa, talk to me with all your experience of EU and the finance, the investment of EU. What is the stability of the system that you see over there? Yes, as indicated by Euro, but far more your knowledge of the complete system for RBC Capital Markets. What's the level of stability right now in EU finance?
And what's really interesting at the moment is that after the ECB's pivot at the Fed third meeting, for the first time you're seeing some spread widening. And for a long time that had been suppressed by the European Central Bank's asset purchases. Now you're beginning to see some measures of sovereign risk, credit risk coming back into markets. I wouldn't say that's questioning the fabric of the euro area itself, but it's just something interesting to watch. A bit of a pivot, if you like, for the ECB, making itself felt in financial markets.
How much of a pivot does Robert Holtzman really represent, a governing council member of the ECB, coming out saying he expects 2 rate hikes by the ECB by year-end? Is he just an outlier, or does he represent some sort of more significant pivot?
He's definitely one of the more hawkish voices on the ECB. But what I found really interesting in his comments was here you have one of the known hawks saying we may get to neutral by 2024. Contrast that to the RBNZ, and like John, I will say RBNZ, coming out overnight and talking about getting to neutral a lot sooner and well ahead of neutral, well above neutral at 3.4%. So I do think there are still some quite large differences across G10 nations.
So that's the thing we haven't settled away from the RBNZ and how to pronounce that, is how far the Federal Reserve will actually take this. And what was interesting about New Zealand overnight is to shift it that much that quickly, from 250 to 325. So if we had that from the Federal Reserve next month, I think there would be a big shock, wouldn't there, to move that dot that much higher that quickly?
Yeah, it would be a surprise for sure, but not one I think we should rule out altogether. When I look into the details of inflation, I know headline inflation is going up across the board, but I think people are overlooking some fundamental differences in core inflation. And it's really New Zealand and the US that are leading the pack within G10. So if you're thinking about places where, you may need rates to get at least to neutral, but possibly even above neutral, those would be your two most obvious candidates.
Really important conversation, Elsa. Thank you. And thank you very much twice for the Z. Arcelinos there of RBC. Almost forget what to say, Tom, when you've lived here in America for that long. You forget that it's Z and not Z.
I really take issue, and this is not, about Z or that.
What is
not getting scope and scale of these economies. New Zealand has an economy the size of somewhere in the vicinity of Oklahoma or Utah. It's really, really important. Obviously, a key democracy in Southern Asia and down onto Australia. I get that. I can't remember. Is it to the right or the left of Australia? I never get that right. But, John, here's the reality. It's a smaller country.
It is.
They make movies there. I think they have sheep. They put out really,
Keep offending people, Tom.
really smart FX people like Nick Benenbrook, and that's great, but it's the size of Oklahoma or Utah.
Yes, Tom, but also, as you know, when you look across the history of central banking, macroprudential policy, where did it come from? Inflation targeting, where did it come from? On a central bank front, New Zealand really punches above its weight.
Way above its weight, and particularly on targeting. John, research just dropping. Mr. Kasman over at J.P. Morgan, a major adjustment. This is Kasman and Aziz walking away from $150 a barrel on oil. They say there'll be a more modest shock. They walk through the supply coming on, including Iran, John, and it's certainly a better tone from Bruce Kasman.
Well, that's the issue here, isn't it, Tom? Do we get an Iran deal? And does that change things sustainably over the long term? We heard from Vitol Group, spoke with Anna Edwards earlier this week, Tom. That's a big CEO of a big oil trading company talking about a massive move in demand in the back end of the year and perhaps pushing crude through to triple digits on a sustainable basis, at least through to next year. That's a different conversation than a short-term supply jump off the back of an Iran deal. Does that move the Dow, Tom, not just over the next few months, but over the next 12 and beyond?
I think the media loves the inflammatory statistics, and here's a major house, Bruce Kasman, of course, a good friend of the show, walking back $150 barrel oil.
Lisa, Brent, 96.
Okay, near term, perhaps you're not going to see the massive disruption. Markets are impatient. They want to see the path of travel more quickly, but it's unclear what could bring oil prices substantially down, even without this conflict. And you do wonder, even if oil prices stay where they are, how much of a shock is that to a market still reeling with supply chain disruptions and some of these other things? I mean, honestly, if you take a look at the inflationary impact and the effect, the ramifications on the Fed, it's not going to be easier monetary policy.
How was skiing?
I didn't go skiing.
You didn't go skiing?
We tried to get we tried to get somewhere and we got diverted and then we ended up coming home.
What happened?
Do you really want to hear it?
Yeah, no, we all do.
Break. Well, we'll do it in the break.
Everybody wants to know now.
We missed our flight. They couldn't rebook us. We ended up in Atlanta in an airport hotel. It was great.
You were connecting in Atlanta.
Yes. Do you want to hear more? Nobody wants to hear this.
Why were you late for the flight?
It was all human error. They forgot to load snacks.
This is like a travel
They forgot to load the snacks.
Yes, it gets even worse.
You should do like a Rick
This is great, Tom. This is great.
It's horrible.
Next up on the program, Lisa's travels. And maybe we'll catch up with Anne-Marie down in D.C. as well. Stuart Kaiser at UBS coming up a little bit later. We'll catch up with him in the next hour. Futures up 0.75%. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. President Biden's first round of sanctions on Russia for its actions in Ukraine hit the markets with a thud. The sanctions targeted a pair of Russian banks as well as 3 members of Russia's elite, but that hardly amounted to the economy-crippling measures the U.S. and its partners had hinted at. Members of Congress from both parties say the White House should do more. The fortunes of Russia's super rich have fallen $32 billion this year, and sanctions from the conflict in Ukraine are likely to destroy even more wealth. Gennady Timchenko heads the list of Russian billionaires who've seen their fortunes drop. According to the Bloomberg Billionaires list, almost a third of his wealth has disappeared this year. He now has a fortune of about $16 billion. In Hong Kong, the government is trying to offset the toll the escalating virus outbreak has taken on the economy. Eligible residents will get almost $1,300 in spending vouchers. Authorities have also earmarked more than $2.5 billion for other antivirus needs. Hong Kong's economic growth is expected to slow to as little as 2% this year. That's after growing 6.4% back in 2021. And Apple has dropped its mask requirement at most retail stores across the US. That's following reduced coronavirus cases and changes in local mandates. Apple's also ramping up for the return of in-store classes. The company is preparing to launch new versions of the iPhone, iPad, and Mac. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project. Initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Season continues.
To the metaverse, to Spotify, to Qualcomm and beyond.
Bloomberg is fastest with the numbers and analysis.
Peloton becoming a proxy for this pandemic.
I think there's a tremendous opportunity.
Bloomberg, the fastest numbers and analysis you trust.
This is the beginning of a Russian invasion of Ukraine, so I'm going to begin to impose sanctions in response far beyond the steps we and our allies and partners implemented in 2014.
The President of the United States, really strong words from him. From both sides of the Atlantic. Tom Keene, did the action match the words? That's where the criticism has been over the last 24 hours.
It's interesting, John. We got a headline out moments ago. The European Union matches U.S. ban on Russian bonds in sanction package. And, John, I just think it's absolutely fascinating. I thought Therese Raphael, who I've got an immense respect for, writing with Paul Davies, nailed. And, John, you were out front on this, which is Johnson with a lot more bluster, I'll say, parliamentary pizzazz than what we heard from the president. And Raphael and Davies just say, look, he did not deter, he did not punish in Parliament yesterday. The sanctions were sanction light.
Sanctioned 5 banks, Lisa, left out the big ones, 3 high net worth individuals. Some of those were already on the list for the United States for a long, long time. That's been the criticism. Really strong words. Where's the follow-up?
And this is the concern even about some of the German proclamations about Nord Stream 2 not going forward. Some people saying, yeah, right, we'll see it when we believe it. Them saying they could be independent of Russian oil. People saying, really? Can you, though? Russian gas. At this point, how do we get to a place where the actions justify the threats and actually are deterring to Vladimir Putin?
Let's whip through this price action just briefly. Up 26. We do have a bounce here. Up 0.6% on the S&P. On the NASDAQ, up 0.9%. Yields higher by 3 basis points to 196.86 on 10s. I am taking so much stick about the Z in the RBNZ, Tom.
You know, I mean, I know, I'm sure all of Maryland is emailing in right.
They're upset too.
We'll talk about this in a moment. One of the great things we know of living in London for umpteen years, Anne-Marie Horder, and our Bloomberg Washington correspondent, did not shift from Z to Z. She joins us this morning. From A to Z yesterday, the energy in the room. How'd the president do, Anne-Marie?
Well, I think many were expecting the president to come out potentially with a little bit of harsher sanctions, given what we've heard from the administration over the course of the past few weeks. But one thing he did clarify was that what President Putin did over the weekend, the U.S. is considering a further invasion of Ukraine. We should note, though, the president made clear this is tranche 1, similar language that the U.K. Prime Minister Boris Johnson did, and they have more tools in the toolbox when it comes to sanctions.
Emery, in Washington, you've got a different perspective with, seriously, your efforts in Europe, including in Moscow. And I want to go delicately here to the statements, not always from leading politicians, of the paranoia of autocracy, the idea that Mr. Putin is not paranoid, but is working with a set of fears that are tangible. Do you buy that?
Well, I mean, let's call it what it is in terms of President Putin's leadership reign over Russia. Since the breakup of the Soviet Union 30 years ago, he has unilaterally 4 times changed the boundaries of those former states. In 2008, it was South Ossetia and Abkhazia. In 2014, he recognized Crimea, and then the next day, 24 hours later, he annexed Crimea. So what he did over the weekend in recognizing the Donetsk and Luhansk self-proclaimed republics, that was the 4th time he has done this. So I think what you can view from President Putin, instead of trying to get into his mind, is really just study his actions.
Well, let's study the actions of the allies. Are we seeing more cohesion, or are we seeing the opposite, that when it comes to the actual action, nobody can agree on something more severe, so everybody just sort of takes these cosmetic measures?
Yeah, the criticism against the Allies that this was incremental, except for one, and I would say that was Olaf Scholz of Germany. And really, he helped the United States out yesterday because every U.S. official I either spoke to on the record or off the record were saying, look, we told you Nord Stream 2 was going to get benched if there was an invasion, and Olaf Scholz delivered in that. Now, we should note, the German economy, this minister, Robert Habeck, is out saying this doesn't mean that it will never see the light of day, but at the moment, they are taking this political decision and not getting that certification that would be needed. I mean, there's already gas in this pipeline, right? It's just not turned on at the moment. We should note this clearly struck a chord with the Russians, and Jonathan was quick to point that out to me yesterday. Dmitry Medvedev, who was the former prime minister, is now a very senior Russian official. He was there over the weekend in that Security Council meeting. He said, prepare Europeans for a brave new world of higher energy costs.
So that was the message over in Germany. In the U.S., is there a similar message? I was struck by the fact that President Biden did not allow some sort of expedited oil permitting in the United States in response to what we have seen, which has caused some criticism. Why isn't there more support for the domestic energy regime? How much has that been a pushback, a criticism more widespread in Washington?
We haven't really heard a lot about that too much in the sense that a lot of the focus is on what is the next tranche of these sanctions, right? But I will say Bob McNally, who worked under the Bush administration in the energy space, had said that this administration is looking under a rock. Those are the words he used, anywhere they can to get oil and fossil fuels to make sure that the geopolitical concerns will not hit consumers at the pump. And he says, why then are they allowing their federal and judicial branches go out and make it harder in terms of wells and pipelines and the likes in the fossil fuel industry?
I mean, Anne-Marie, this is important. There's an IMF series, folks, of Russian gas at the German border. But, John, you know that the series we follow on the terminal and worldwide is the TZT commodity series. Thank you, Javier Blas, for wisdom. The short-term chart, John, is up 30% since the 16th of February. And the long-term chart shows the angst that they're living on the continent of Europe as they look at TZT.
And that's how we pronounce it in London too, Tom, just for the record. This is after a monster move, Anne-Marie, last year as well. We've touched on this briefly. Let's build on it a little bit more. Where do you think the focus is going to be now? Is it to close a deal with Iran quickly? Or is it to do something at home, to have some kind of tax holiday on gas?
The tax holiday on gas, I think, at this moment is kind of just in limbo, right? When senators come back, they're going to need to make some sort of agreement between the two when it comes to talking tough and putting that pen to paper when it comes to Ukraine and Russia. So I would say that potentially an Iran nuclear deal. And what we're hearing out of Tehran from the foreign minister, Hossein Amir-Abdollahian, this morning, saying that he is optimistic. But critical in his notes this morning, he says that Iranians' red lines cannot be crossed. One of those red lines Tehran has always had was that if there's another Iranian nuclear agreement, that it would have to be law, meaning if there was a red wave or a future president that's a Republican comes in, they cannot tear it up. And that is just legally not allowed in the United States. So it does seem like there's an optimistic tone coming out of Tehran and Vienna where these negotiations are taking place. But if that is a red line that they will not cross, there will not be a nuclear deal.
Anne-Marie, thank you. AMH down in D.C. Look out for Anne-Marie a little bit later on Bloomberg TV and on Bloomberg Radio, catching up with the Ukrainian foreign minister. That is an exclusive interview later this afternoon, led by Anne-Marie Hordern. Looking forward to that at around 3:30 Eastern Time. Futures up 0.6% on the S&P, on the Nasdaq up 0.9%, bouncing back just a little bit from yesterday's losses. Yields approaching 2% all over again on 10s. 197 is your yield. From New York, this is Bloomberg.
U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Down 10% at a close yesterday, at a close on the S&P 500. Correction territory, they call it. It's the bounce, perhaps out of correction territory, Tom. Up 0.6% on the S&P. On the NASDAQ, up about 1 full percentage point. A nice bounce back on your equity market, for now at least. Maybe the tally yesterday was at the front end of the bond market in twos. Why was that the tally? Switch up the board. Yields were higher. So as we were all talking about the actions from Russia in Ukraine, the response from the UK, the European Union, the United States, two-year yields kept climbing. What did that tell you? That the Fed is still on course, on track to hike interest rates. And that conversation about 50 basis points, it's still there. Not in a major way, but it's still there. Up another 4 or 5 basis points today. Twos approaching 160 all over again, 159.76. It's not about the start point, though, as you know. It's not about the speed of the journey. It's about the end point, how far they're willing to push this. That's why the New Zealand Central Bank decision was so interesting. Looking to push it to 325 by the end of 2023. The previous forecast showed 250. So we adjust on the front end in New Zealand by 13 basis points. In Australia by 6 basis points. Will we adjust in the same way, Tom, next month? Because for a lot of people, that's where the comfort is. Yes, we might go in March. Yes, we might go many times through 2022, but ultimately they won't push it too far. That gives people, equity bulls, Tom, just a little bit of comfort to stay long.
John, I'm not a fan of the parlor game, and I'm even more so not a fan of the parlor game where we're hanging on headlines from Ukraine. I just think, you know, as you say, with the correction territory based off that John Wayne movie in the 60s, is the idea here the news flow is the boss now. And the Fed is going to react to the news flow, and they're going to be massively data dependent.
How they react relative to what's priced, Tom. That's why the consensus matters. That's why the parlor game matters, Tom. It's about what's priced, where is the consensus. The consensus at the moment is they go 5 or 6 times in 2022, and that ultimately, Tom, they pause in and around 2%. Does the Fed have to go higher than that? When you think about where the surprise can come from, either upside or downside, hawkish or dovish, the hawkish surprise, Tom, comes from a Federal Reserve that has to take this interest rate a whole lot higher than this market and the Federal Reserves themselves are looking for.
Very good. I want you to stop and pause, folks, because what is important, buried in the Bloomberg terminal and of great use, is the track record of people. He is in the 97th percentile of 3-year performance, and in last year's tumult, defeated the Standard & Poor's 500 by what's called 731 basis points. That's 7% plus outperformance off SPX. He is so alone, well, he has time to come on with us. Andrew Sliman joins, Senior Portfolio Manager at Morgan Stanley. Let me look back, Andrew. How did you do that in 2021?
Well, I think what really worked for us was most people own too many growth stocks and starting to increase the exposure to value stocks. And owning some energy and financials. That really distinguished. Look, I think the S&P has become a growth index. Top 10 stocks are largely growth tech stocks. So tacking away from that and being overweight some of the value areas in a year where they're working, and they certainly are so far, that right. You can drive. And look, at the end of the 70s, the top 10 stocks were energy stocks, and now the top 10 are tech stocks. So I think it's a great opportunity for active management.
You published this morning that what we're seeing here in our international relations and our fractured moment-to-moment focus is a buying opportunity. Why is that?
Well, look, because if you look at 10% corrections, on average, 12 months later, you're up a lot, even if they morph into much worse than 10% corrections. About half of the 10% corrections become 15% corrections, and a quarter of the 10% corrections become 20% corrections. But even if you look out a year, if you bought down 10%, it might get ugly earlier, which I think it will this time again. A year later, you've been well served to step up into those corrections.
Andrew, you just were talking about the importance of active management. We've been talking about the churn under the surface. Some big winners, I'm thinking of energy. Some big losers, I'm thinking of certain tech stocks. What do you buy if this is a buying opportunity?
Well, I think so look, on the surf, I'm really changing my tune a little bit since I've been on. Last year, I was on and I kept saying, look, the real high-flying growth stocks are too expensive, but I don't think the quality growth stocks are as expensive. Well, you know what? Those high-flying growth stocks have come down so much, and the quality growth stocks have held in there that now the pricing has shifted, and I think the safer growth stocks, which are the mega cap tech stocks, are more vulnerable because these, the high-flying growth stocks have just been so thoroughly trashed. So at the end of the day, the opportunity remains in the value stocks. Look, if the Fed, this is the very important point, if the Fed was going to over-tighten and kill the economy, cyclical stocks wouldn't be outperforming. Treasury yields would be dropping. Right? They're not. It tells me there would be a rotation into growth stocks. That's not happening. That tells me, as much as the discussion about how many times the Fed's going to raise rates, they're probably not going to raise rates as much as some of these predictions, because the market is telling me to stick with the economically sensitive stocks, and I think that's where you want to be.
Although a lot of people are looking at the yield curve, which is contracting at some of the narrowest levels that we've seen since the beginning of the pandemic, and saying, actually, recession risk is real. Growth scares are real. And frankly, we're not seeing that baked into some of these stocks, which means that perhaps they are more vulnerable. How do you push against that?
Well, that's true. I mean, yeah, you're absolutely right. The yield curve yesterday came down a bit. We'll have to see. It has come down and then it bounces back. Usually, as it gets closer to zero, it becomes a tougher, more stubborn. We'll have to see. High yield spreads, investment grade spreads haven't blown out that much. So I'm watching. I'm still sticking with this. Stick to the value trade. I still think you'd see a much bigger rally in Treasury yields than we saw yesterday, if in fact recession's around the corner. And then the other thing that I would push back is what no one seems to be talking about is, Lisa, do you know that the estimate for the S&P is higher today than it was at the beginning of the year? Estimates keep going up. Yes, I understand they're not going up at the same rate they did before, but the fact is companies continue to do better than what was estimated at the beginning of the year. That's bullish.
It's bullish, but we've got to do something here. Andrew, how much cash do you hold right now? I mean, with your track record, I think people really